Madness.
U.S. Trade Representative Jamison Greer defended the tariff plan.
The president's strategy is already bearing fruit,
saying it's all about leveling the playing field.
Nearly 50 countries have approached me personally to discuss the president's new policy and explore how to achieve reciprocity.
Lindy Kenyon, CBS News, the White House.
Well, CBS's Kelly O'Grady on the Wall Street situation.
The S&P 500, a two-day loss of over 10%. It's only happened 4 times in the history of the stock market. And you see over the 5 years after that, 100% return. So some people are looking at this and saying, good buying opportunity.
The Dow is up 927 right now. For the third time recently, the Pentagon has fired a senior female officer. CBS's Charlie D'Agata.
This comes from Chief Pentagon spokesman Sean Parnell. Secretary Hegseth has removed U.S. Navy Vice Admiral Shoshana Chatfield from her position as a U.S. representative to NATO's military committee due to a loss of confidence in her ability to lead. The Defense Department is grateful for her many years of service. That is where the statement ends.
Officials indicate the firing was apparently linked to comments she'd made supporting diversity. Supreme Court wants arguments by day's end in the case of a man who the administration admits was mistakenly deported to El Salvador. Attorney General Pam Bondi.
He is a known gang member. ICE testified he was a gang member, and we believe he should stay where he is.
The man's family insists he's not a gang member, and the Supreme Court has blocked an order requiring the administration to return thousands of federal employees to work. In Kentucky, the governor Andy Beshear leading the damage assessments after flooding.
We need people to wait this out. In many places, we've seen the rivers crest, and the flooding will be going down.
Well, CBS's Michael Wallace has the latest look at how we're feeling about EVs.
The Gallup poll shows the number of Americans open to buying an electric vehicle has dropped to 51%, down from 59% 2 years ago. Gallup says interest was already waning last year before Elon Musk's foray into politics sent Tesla sales plunging. Drivers were already concerned about a lack of charging stations and the driving range of EVs.
This is CBS News. Prince Harry in court today for the latest chapter of his legal challenge against a government decision about his personal security.
Morning, Harry.
An in-person appearance by the Duke of Sussex in a London courtroom. Harry there to fight an earlier ruling that he and his family are not entitled to special police protection while in the UK. Harry's no longer a serving royal, but he argues he and his family are still under increased threat because of hostility aimed at him and his wife, Meghan. Harry's offer to reimburse the police for his protection has also been refused. Vicki Barker, CBS News, London.
For tonight's Mega Millions drawing, players' odds have slightly improved because of a hike in ticket prices from $2 to $5. It means jackpots should grow larger faster. Hours after Florida won the NCAA men's basketball title last night, odds makers gave final game runner-up Houston the best odds to win the tournament next year. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Tuesday edition as we count down to reciprocal tariffs to take effect at midnight. The markets today are rising on hopes for deals. This is Donald Trump's White House, after all, but maybe not China. Pointing now to a fight to the end. We're going to talk about the escalation with the world's second largest economy with Tom Orlik, chief economist at Bloomberg Economics. The Supreme Court just now backing President Trump on firing thousands of federal workers. The ruling just dropped. We'll have analysis from our political panel, along with Bloomberg Politics contributor Rick Davis, our Republican strategist, and Democratic strategist Kristen Hahn. Let's get to Wall Street. This is a different look with green on the screen for Charlie Pellet in New York. Charlie, what do you have in the markets?
A very different tone from this time yesterday, Joe Matthew. We've got the Dow, the S&P, NASDAQ all advancing right now. Your key takeaway at midday: we are off session highs, but still solid gains across the board. Right to the numbers with the S&P now higher by 120, up 2.4%. Have been up as much as 4%. Dow Industrials up 968, up by 2.6%. NASDAQ Composite Index right now advancing by 2.5%. The 10-year 4.20%, with the 2-year currently yielding 3.78%. Stocks heading toward the biggest gain since November. We've got the price of gold up 0.4%. Spot gold was trading above 3,000, just pulling back somewhat now at $29.95, still up $12. And West Texas Intermediate crude up 0.7%, $61.11 for a barrel of WTI. All about tariffs again today. As for market sentiment surrounding those tariffs, John Stoltzfus is chief investment strategist at Oppenheimer, and he was interviewed on Bloomberg Open Interest.
Everybody was in shock by the degree of the tariffs. I think everybody had expected tariffs, but it was like a big difference from tariffs 101 at the administration's previous run in the White House, and now essentially tariffs 401, senior year, you know.
John Stoltzfus of Oppenheimer interviewed on Bloomberg Open Interest. Levi Strauss shares are trading lower now. We've got Levi Strauss down 3.2%. It is maintaining a full-year outlook, but excludes the impact from sweeping U.S. tariffs. Joe brought us the headline moments ago. Worth repeating: U.S. Supreme Court blocking a judge's order to reinstate 16,000 federal workers in 6 government departments, granting President Trump's request. A topic we'll be exploring a lot more coming up on Balance of Power. Briefly, Fannie Mae firing over 100 employees for unethical conduct. Balance of Power continues right now. Back we go to Washington. Here he is, Joe Matthew.
All right, Charlie Pellet, there he is, live in New York. We'll get back to Charlie in a bit to check on these markets, see if we're holding positive here. As Charlie mentioned, we've seen better numbers today, but at last, some relief in a story that has dragged on days, and it's really just beginning. Let's be honest, not the market reaction, but the tariffs, the reciprocal tariffs go into effect at midnight tonight. And there are questions about, of course, their impact. There are questions about what deals, in fact, could be made as we look squarely at China today. President not making anyone happy in Beijing, now criticizing President Trump's threats to oppose this additional, remember yesterday around this time, 50% tariff, he said, reciprocating the reciprocal or something to that effect. China calls it blackmail. The U.S. threat to escalate tariffs on China, a mistake on top of a mistake, the country's commerce ministry said in a statement. China will never accept it if the U.S. insists on its own way. China, ready? Will fight to the end, unquote. That does not sound like a country that's about to make a deal. Though on Truth Social, President Trump says quite the opposite. China also wants to make a deal badly, he writes, referring to a deal in the works now with South Korea. But they don't know how to get it started, he says. We're waiting for their call. It will happen! Exclamation point. Earlier today, we heard from the chair of the Council of Economic Advisors at the White House, Stephen Myron, on Bloomberg Surveillance, had this to say.
I think that depends on the Chinese. And, you know, my advice to them would be that they have a lot more to lose than America does, that America holds a leverage, and everybody knows that, and therefore they should seek a détente, and they should offer concessions which would persuade the president to relent.
Seek a détente, as we do right now with the great Tom Orlik. There was one voice we wanted to get to today, as this really seems to focus around China at the moment, and that is the chief economist at Bloomberg Economics, Tom Orlik, who spent a good chunk of his career reporting in China and has a good sense of the psychology right now in Beijing. It's great to have you back, Tom.
Great to be here.
I have very simple questions for you on this. Because we're actually talking about fairly simple ideas here. It's just been a very complicated reaction. What is the psychology when you hear terms like blackmail, fight to the end? How is Beijing interpreting this line from the White House when it comes to tariffs and more layers of tariffs?
So, of course, I don't have a window into China's leadership compound in Beijing, Joe. But I suspect if we could listen in on some of those conversations, China's leaders would probably be thinking, well, first, in Trump's first term, we engaged in an extensive negotiation over tariffs. We struck a deal. Yes, we didn't fully live up to the terms of those deals, but there was a COVID pandemic. It's force majeure. Now, Trump's hitting us again, and with much higher tariffs. Is this a reasonable negotiating partner? If we negotiate in good faith once and do a deal, but that deal doesn't seem to have any traction, is there any point in us engaging in another negotiation? So I think that's probably part of the reason why we're seeing China hitting back rather than attempting to negotiate.
Interesting. Fight to the end is pretty stark. That sounds like we're not going to be reaching a deal anytime soon. Washington has a certain angle on China. It's a bipartisan affair, although this White House has a particular obsession with China when it comes to trade. Does it deserve that reputation?
So I think the idea that China has more to lose from this than the United States does is true. China has the trade surplus. The United States has the trade deficit. China is benefiting from catch-up on technology as U.S. firms move their factories and their expertise and their IP into the Chinese market. So China does have more to lose here, but China's not the only country that has something to lose in a trade war.
Sure.
Think about the U.S. firms, which have supply chains across China's east coast. Apple being a prominent example. Think about the U.S. consumers who've grown used to being able to pick up their clothes and their sneakers and their electronics at bargain basement prices. And think of the investors who've been making big bets on this relationship staying in place. There are some pretty important U.S. constituencies who are going to be losing out here.
Well, that's right. I mean, you could argue we wouldn't have Walmart without China, right? We wouldn't have cheap appliances without China. We'd be paying $3,000 for an iPhone without China, or some of the countries that have seen spillovers with Apple and so forth trying to relocate some manufacturing. But this is why people are talking about upending the world economic order. Without China, do we not pay more for everything?
Well, I think the president, if he were here in the studio, Joe, would say we'd also have more of a manufacturing industry if it weren't for China, right? So there's two sides to it for everybody.
But our labor is much more expensive.
The labor's much more expensive, but maybe it's worth paying more for our consumer goods, the White House believes, if that guarantees a future for the U.S. manufacturing industry, a path to a stable middle-class life for U.S. workers, and locks in our national security, right? Part of the argument here is not about economic efficiency and profits and market gains. It's about recognizing that China's a geopolitical rival. And do we want to be so dependent on a geopolitical rival for crucial inputs?
Sure. Well, when you talk about high-end manufacturing, advanced manufacturing, I understand the drive there. When you're talking about making socks or sneakers, is that really what we want to bring back to this country? What would our economy look like?
I think that's a great question, Joe. So I used to live in China, and I visited some of the manufacturing centers. I've seen what it's like working in a factory that snaps together iPhones or sews up sports gear. Those are great jobs if you were working on a Chinese farm, because by going into the factory, you're doubling, tripling your income.
I see.
Are they a great job if you're a U.S. worker? Do you want to work in those conditions? I think there are some questions there.
Well, I'm sure that's true. As a go forward, you look at this truth post from Donald Trump that I was reading. He seems to think that a deal with South Korea would unlock a deal with China. in fact, says their top team, South Korea, is on a plane heading to the U.S., and things are looking good. We're likewise dealing with many other countries, all of whom want to make a deal with the United States, and he points to China. Could some motion in the region, South Korea, Japan, in fact, unlock a deal with Beijing?
So I think there are some really important differences between South Korea and China when it comes to their relations with the United States. So the first one is South Korea is a U.S. ally, and South Korea relies on U.S. troops as part of the deterrent against North Korea. Exports are also incredibly important as a driver of South Korea's growth. They really can't do without export markets. So for security reasons, for economic reasons, for treaty reasons, you can understand why South Koreans might be wanting to get on a plane to Washington, D.C. None of those things apply to China. China is not a U.S. ally. China is in many respects a U.S. adversary. Exports are important for China's economy, but not nearly as important as domestic demand. So they take a hit here, but it's nothing like the size of the hit which South Korea would take. So it doesn't surprise me that some mid-sized economies like South Korea should be picking up the phone. Does that mean China's going to be picking up the phone? I'm not holding my breath.
Wow. This has been a clinic with Tom Orlik. In our remaining moment here, Vietnam, accused of laundering Chinese goods through its country, and they end up here evading tariffs, essentially. Do tariffs stop that kind of behavior? Is Vietnam caught in the middle?
So think about the difference between Trump 1 and Trump 2. Trump 1, China got hit with tariffs. Vietnam didn't get hit with tariffs. Mexico didn't get hit with tariffs, right? That's a world where if you're a bit crafty, you can game the system,
Does this change that behavior?
Let's send the ship to Vietnam and then on to the US, and then we can dodge the tariffs. If everyone gets hit with tariffs, that game doesn't work anymore.
Boy, fascinating. I hope we can stay close with you on this, because the next couple of days, it sounds like will be critical here in the region. Tom Orlik, he's the chief economist at Bloomberg Economics for a reason. And great to have some time, Tom. Thank you so much. You're on the fastest show in politics. Nathan Dean is on the way in next from Bloomberg Intelligence. We have a lot more to talk about here on the Tuesday edition on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are well off session highs, but still solid gains for the Dow, the S&P, and NASDAQ. The S&P has paired an advance that at one point reached 4% right now. We're up 1.8% on the S&P. That is a gain of 88 points. Dow Industrials up 753 on the Dow. That is a gain of 2%. While the NASDAQ Composite Index up 273 now, up by about 1.7%. 10-year 4.19%. The 2-year currently yielding 3.76%. Gold up $14 the ounce. Spot gold up 0.5%. And West Texas Intermediate crude up 0.5%. WTI right now at 61 even for a barrel of West Texas Intermediate crude. Barrick Gold has provisionally approved plans to develop a vast copper and gold project in Pakistan and expects to sign a $3 billion funding package for the mine in the third quarter. First production scheduled for 2028. The company, by the way, will be changing its name to Barrick Mining to reflect the evolution of its business. Shares of Barrick up now by about 3%. Again, recapping, stocks higher. Key takeaway at this hour, well off session highs. S&P up 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash. Balance of Power continues right now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Charlie Pellet, every day with us here on the fastest show in politics, Watching Wall Street, on Bloomberg Radio, on the satellite radio, channel 121, and here on YouTube, where you can find us always by searching Bloomberg Business News Live. You know, things are weird when Ted Cruz and Elizabeth Warren are agreeing on things, and that's the moment we're at right now. When it comes to tariffs, yeah, strange bedfellows, as Ted Cruz criticizes President Trump's tariffs, talking about angels and demons. I fear we had the wrong characters cast in this little drama that we were creating here, or metaphorical drama at the White House, with the idea of Peter Navarro on one shoulder. And now Ted Cruz says Elon Musk is on the other, talking to Donald Trump about tariffs. It's not Scott Bessent. He's over the Treasury Department trying to get the 10-year yield lower. Elon Musk appealing directly, we now understand, to Donald Trump in advance of these tariffs taking effect tonight. Ted Cruz agreeing with him, praising Elon Musk, who hopes for a free trade zone between the U.S. and Europe, describing him as one of the angels on President Trump's shoulders, focused on jobs. Enter the senator from Massachusetts, Elizabeth Warren. Says all you have to do is exercise your own authority here on Capitol Hill, and we've got the tariffs taken care of. That is the purview of Congress. And she joined us last evening on the late edition of Balance of Power to make the point that simply passing a resolution, making it clear that this emergency that Donald Trump is referring to base the tariffs on is in fact not applicable here, and we'd be done. Is it that simple? Here's what Elizabeth Warren told us.
If Congress says, no, there is no emergency here, then Donald Trump loses his ability to put all of these tariffs in place. So we need to act. We need a Secretary of Treasury to do his job. The Democrats in Congress are ready to act. But if the Secretary of Treasury won't act, then we need the Republicans to step up, join the Democrats, and put a halt to these tariffs that are truly wrecking the worldwide economy.
Well, Senator, the president argues it's going to help the U.S. economy, that this is actually about bringing manufacturing back to the U.S., protecting American workers, and lowering trade deficits with other countries. Is there something fundamentally wrong with that objective, or it's simply the means that you take issue with?
The objective is exactly one that I have advanced for years. Of course, tariffs should be one of our tools in the toolbox of economic policy. And there are times when appropriately executed that we could use a tariff, for example, to onshore a specific supply chain or to help build up manufacturing that we want to have here in the United States. But you do that in a thoughtful, integrated way. Instead of a haphazard number around tariffs applied to everyone with no thought at all about whether or not those tariffs will actually have a negative impact on manufacturing that's currently going on or any manufacturing that anybody might try to get underway. Instead of actually supporting manufacturing and good jobs, the way Donald Trump has done this has been to scare off anybody from investing here in the United States in any kind of facility that takes years to be able to build and expand and get it going. He's forcing people to pull back. That is not good for American workers. It is not good for building jobs here in America. It is not good for onshoring our manufacturing. You need a thoughtful policy, and that is the opposite of what Donald Trump has offered.
The take from Elizabeth Warren, Democrat from Massachusetts, with us on the late edition of Balance of Power yesterday. Nonetheless, you can put the countdown clock up because the reciprocal tariffs, the president says, are taking effect at midnight. It's anyone's guess what happens after that, with now, according to the Treasury Secretary, 70 countries reaching out for negotiations. You know, we live here inside the terminal. If you're with us on YouTube, you see this backdrop. Just imagine us inside the terminal. It's almost like the severed floor. Only subscribers can get in. But Nathan Dean is our window to the world. He actually has the line to the outside. Clients who are calling in with questions, with concerns, with fears. There's only one guy you call here. Bloomberg Intelligence Senior U.S. Policy Analyst, if you want to really know what's happening. His name is Nathan Dean. It's great to see you, sir.
Thanks again for having me.
Phone's not stopped ringing. What is the real concern here? Markets are up today. I know we're feeling pretty good about things, but these tariffs are still kicking in at midnight. Nothing's really changed.
Yeah, and I think that's the biggest question we're getting from clients at the moment is, will President Trump reverse his policy? And I think if anybody's watching the Senate Finance Committee hearing this morning, you know, the answer is most likely not. Mm-hmm. You know, the U.S. Trade Representative Jamison Greer was very adamant that this is a long-term plan. You know, the long-term gain for short-term pain is what he was saying. And so we do think these tariffs are going to go in, but we always put it with the asterisk of President Trump loves to negotiate. And even in that same committee hearing, you know, Ambassador Greer was saying, you know, we're working with 50 countries at the moment, 50 countries that we're working on trade deals. And I think that's what the market is really looking for. And we saw some, you know, lawmakers from the Republican side say that as well is, look, we need some sort of end game here. You need to tell us where this is going. What is the plan? Mm-hmm. And I think that plan starts with trade deals. So I wouldn't be surprised if these tariffs go into fruition, but I also wouldn't be surprised if you see a trade deal emerge over the next day or two, if not sooner.
Yeah, Jamison Greer, USTR, sitting for a hearing, actually 2 days worth of hearings, first day in the Senate today. Let's listen to what he had to say about these countries we're dealing with, because it doesn't sound like we're about to make deals when you listen to Mr. Greer. Here we go.
The president has been clear, again, that he's not doing exemptions or exceptions in the near term. My own sense is, given the tariff differentials between Asia and Western Hemisphere, I think people can start making decisions based on that.
So when you hear no exemptions, why are we talking to 50 countries? Doesn't that sound like 50 exemptions coming?
Well, I mean, and I would also just put his comments in the greater context of, you know, the Trump administration, where, you know, he's not just the only person. And remember, it is President Trump at the end of the day who decides what the policy is, and there could be exemptions. You know, it's very hard for the U.S. Trade Representative to combat Apple and Tim Cook if Apple and Tim Cook were to go into the White House and ask for an exemption. Look, I'm not saying there will be exemptions, but it's just difficult when there's other things here to play.
Sure.
But I would also point out is that, you know, when it comes to these negotiations and so forth, there's going to be ramping up political pressure from the Republican side if we begin to see this impacted at the consumer level. Mm-hmm. Senator Tom Tillis, up for re-election in 2026, had some fairly strong language for Jamison Greer in that hearing.
Yes.
And I'm paraphrasing here and said, who am I going to hurt if... You know, if this turns out wrong, you know, obviously we don't think the Republicans are going to push back on the Trump agenda right now. But if this continues over the next few months, you may see more and more Republicans coming.
We wrote that up. It's on the terminal. Tom Tillis, whose throat do I get to choke if this turns out to be wrong? Republican, North Carolina. Is he just trying to get tape on himself to be caught saying this at the right time if this does, in fact, go south?
Yeah, I think a little bit of this is political. I mean, obviously, we saw bipartisan legislation last week from Senator Grassley, Iowa, farm state, very important for farmers and ranchers, teaming up with Senator Maria Cantwell, that would bring back the authority of a president to impose tariffs and put it back in the congressional side.
Yep.
Now, that's not going to go anywhere. I don't think the Republican leadership has any desire to touch it, and President Trump said that he was going to veto it. But, you know, it did get a couple of bipartisan supporters, and I think if this trade war were to continue over the next few months, you could probably get a little bit more and more, because ultimately, and this is where we feel, is that we don't think President Trump is going to respond to Wall Street. Jameson Greer said the exact same thing today, that Wall Street's not going to dictate this outcome here, but if the consumer confidence levels and things for food and Apple electronics and other things begin to go up dramatically, then you potentially could see much more Republican pushback.
You start wondering if the real trade war is happening inside the White House now. This stuff between Peter Navarro and Elon Musk is wild. I can't even read the tweets on the air. That's how chippy that got this morning. So clearly, not everyone agrees, even inside the White House, inside the administration on this, making you wonder how fluid this whole conversation is and whether it complicates what's happening on Capitol Hill. The Speaker wants to get a vote by tomorrow, I understand, on this this framework here, the budget plan that passed the Senate. Donald Trump takes to Truth Social again. The House must pass this budget resolution, and quickly. There are a lot of Republicans in the House who are not prepared to vote yes on this.
Yeah, and you know, I wouldn't be surprised if this takes a little bit more time. I mean, tomorrow is pretty pretty
ambitious.
Quick. Yeah, ambitious. That's the perfect word here. But what I would say is that I do think Speaker Johnson, and we also heard this from Representative Jim Jordan, when they're going around telling their members, look, this is just a blueprint. This is just to keep the process rolling.
Yes, right.
You know, I think that's easy for Republicans to eventually grasp on and say, look, rather than incur President Trump's wrath right now, let's save it for when we actually have specifics. And so when things like SNAP, you know, the Inflation Reduction Act, Medicaid, when those cuts potentially come up, then we'll actually fight. But for us, we think the process will continue. And ultimately, we think the Senate plan is the one that Congress is going to gear towards, because if the current baseline policy, meaning this $4.5 trillion in tax cuts, you effectively are free or the cost of zero, then you don't have to cut SNAP. You don't have to cut the IRA. You don't have to cut Medicaid. You can essentially just have to deal with deficit hawks at that point. And I think it's much easier for President Trump to go down to Capitol Hill and say, look, are you going to derail my plan? Because if so, let's talk about it now, and I'll make sure that Elon Musk and everybody else in the world is aware of it.
That's right, and he'll be tweeting, Elon, that is. They're actually going to be at the White House, a half an hour from now. There's a meeting, Republicans from Capitol Hill talking to Donald Trump about this, so let the public pressure begin. We're out of time. Has Wall Street ever thought worse of Washington than right now at this moment?
I'm not sure Wall Street has many views on, or they have many views on Washington.
Oh, yeah, not very good ones, though. I mean, the calls you're getting, people sound desperate, right? They're angry. They want to know what the problem is in the federal city.
All they want is clarity. That's it.
See if we can ever find it. With the help of Nathan Dean. Great to see you, as always. Bloomberg Intelligence, find him on the terminal and online. Senior U.S. policy analyst. If you're a client, give him a call. In the meantime, we'll assemble our panel. Rick Davis and Kristen Hahn are straight ahead with a Supreme Court ruling today and tariffs about to take effect at midnight. We've got a lot to talk about. The fastest show in politics on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, but we are well off session highs right now. The stock rally is easing right now, looking at a 1% gain on the S&P 500 index. Have been up as much as 4%, but the S&P now advancing by 49 points to 5112, again up by 1%. The Dow up 524, advancing 1.4%. NASDAQ is up 0.8%, while the NASDAQ 100 index is advancing by 0.9%. The 10-year, 4.17%. The 2-year, 4.75%. Stocks advancing after Treasury Secretary Scott Bessent fueled hopes of trade deals. Spot gold, little changed, up under 0.2% right now, below 3,000 at 29.88 the ounce. West Texas Intermediate crude 60.56 a barrel, down 0.2%. Investors betting on quick action by the Federal Reserve to support U.S. business conditions may be off the mark. And with that story, here's Bloomberg's Vinny Del Giudice.
Fed watchers interviewed by Bloomberg News say they believe the central bank will wait until the impact of U.S. tariffs show up in official data to act, and that may take months. Fed officials have a track record of acting to stabilize markets and the American economy during times of crisis. At one point Monday, interest rate swaps implied about a 40% chance the Fed would act before its next meeting in May. Swaps traders have since stepped back. Follow the money. Vinny Del Giudice, Bloomberg Radio.
Eli Lilly shares are higher after Goldman Sachs upgraded the obesity drug maker to buy from neutral. Shares of Lilly up now by 1.3%. Hewlett-Packard Enterprise lower after being cut to equal weight from overweight at Morgan Stanley. Right now, HPE, Hewlett-Packard Enterprise down by 2.5%. Recapping, S&P up 0.9% for on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you. Charlie, as we keep our eyes on the markets here, not exactly the most impressive run after a 1,000-point-plus rally first thing. The Dow's chopped that number in half. The S&P 500, as Charlie mentioned, certainly well off its highs as well, making a lot of people wonder if this is real, a dead cat bounce, or the biggest short squeeze in recent memory. And the reason why we're asking is because nothing has changed on the tariff front. There is apparently some optimism for deals being made. The White House says that countries are calling, 50 to 70 of them, depending on the cabinet secretary you hear from. But no deals have been made yet. They will take effect at midnight. Reciprocal tariffs, the baseline tariffs already in place. It's an important Supreme Court ruling that does not have to do with tariffs, aimed at the Trump administration today. In fact, this has been an interesting period of time here with another Supreme Court ruling that favors the administration. In fact, there have been a couple here, third time in less than a week. The Supremes have backed Donald Trump's actions. In this case, it has to do with firing federal workers. Doesn't that seem like a story from a long time ago? It's just a couple of weeks, in fact. There were 16,000 federal workers in 6 government departments. Many cases, probationary workers. They were just coming in. They hadn't gotten their tenure yet, if you will, and told to pack up their desks and leave, the door locked behind them. This went through a series of courts until it reached the highest, the Supreme Court now, and this happened just as we were taking air at the top of this hour, backing President Trump's campaign to fire tens of thousands of federal workers and blocking a judge's order here that required the administration to reinstate employees in those 6 agencies that I mentioned. This is where we start our conversation with our political panel today. Republican strategist Rick Davis is here, partner at Stone Court Capital, Bloomberg Politics contributor, alongside Democratic strategist Kristen Hahn, partner at Rock Solutions. It's great to see you both here. Rick, what does this tell you about not only this particular case? A lot of workers are not coming back to the office here in Washington. You might even be able to extrapolate that to suggest a lot more firings are coming. But also the Supreme Court, once again, aligning with Donald Trump. How do you rationalize all of this today?
Yeah, look, I mean, I think this is all core to the Donald Trump strategy, right? Which is not to go to Congress and ask their permission to do these things, but to do what you want to do as an executive, branch of government and let the courts, the third branch of government, decide whether or not what you're doing is appropriate or not. And frankly, I mean, I think the strategy they have, which is, don't meddle in Congress, but keep things out of there and let the legal process determine these things, is kind of a 60-40 deal, right? If he gets 60% of these, judicial rulings in his favor, they're all going to be high-fiving in the Oval Office and thinking this is great stuff. We've just expanded the power of the presidency. So whether it's on this or immigration or tariffs, they're going to challenge the legal system, not the congressional mandate. So I think this is, this is a limited ruling. The Judge of Maryland still has a procedure out to determine whether other full-time employees were or being fired inappropriately or illegally. But for the provisional workers, they're gone. I mean, this is a pretty solid ruling for them to be able to take these, 16,000 workers and send them home. So I think it's a big victory for the Trump administration strategy around reducing the workforce in the federal government, and should open up other venues for them to try and find solutions to this on a legal basis. But look, I mean, they're going to win some, they're going to lose some, and at the end of the day, they are marching toward expanding the power of the executive branch of government.
That's for sure. To Rick's point, workers in 19 states and D.C. still must be kept on paid administrative leave at a larger set of agencies under that judge's order in a similar case in Maryland. Otherwise, everybody's going home here, Kristen, and I wonder your thoughts on this Supreme Court ruling. We'll get to the immigration ruling in a moment here, but in terms of expanding the executive's power, how many more layoffs could this lead to?
I mean, I could think it could lead to a significant number of layoffs. I think Rick's exactly right. This administration has made the determination, I'm not saying they're wrong, saying that, we're not going to deal with Congress. We're going to go through the judicial system. So until Congress takes its power back and addresses some of these issues, because the issue is, when you've got a president coming in, issuing executive orders, the only way you really have long-term, stable policies that stand the test of time throughout multiple presidencies and different, Democrats and Republicans, people on both sides of the aisle who sit in that Oval Office, this is going to continue to happen, and we're just going to experience a lot of whiplash when it comes to not just the economy, but the workforce. And you're talking about a lot of these provisional workers too, who, it sounds like it's an easy thing, but you've got a lot of this young blood, these new workers who are coming in into the administration, into the federal government, who are, would seem to be a lot of the people that we want to invite. We want to have new people there. We want to make sure that, we're continuing to have smart, dedicated people who are taking these federal jobs. And so, it's a real detriment to that. But I think people are seeing the effects of this, particularly when you look at some things like the Veterans Affairs, administration. You're looking at things that are really upsetting people, and it manifested itself in a lot of these, these demonstrations that you saw over the weekend.
Well, for those of you who thought the courts would be a check on the president, the Supreme Court, at least, not so much here, in another ruling allowing President Trump to resume the deportations. Deportations under the Alien Enemies Act. Remember this group of alleged Venezuelan gang members put on a plane to El Salvador brought us to this moment. The court granting an emergency request on a 5-4 vote. The flights will continue. There are some caveats. Here's Press Secretary Caroline Leavitt speaking earlier in the White House driveway.
What the ruling says is, as from yesterday forward, what we can do is we can still deport, but they are entitled to habeas in the court of confinement, which means all of these cases will go through Texas. There will be no more class actions. It will be 2 questions asked. Do you qualify under alien enemies, and are you a violent gang member? Are you a member of TDA? That's what will be asked.
All right, so there you go. They're going to be in Texas, and the court ruled detainees must have notice and a chance to make their case to a judge before deportation. That's pretty important, Rick. If that's the case, you're not loading a bunch of guys in shackles on airplanes. That's going to slow down this process significantly, won't it?
I don't know how significant it'll slow down. First of all, these investigations that Commissioner Holman has been describing, they build case files on these guys, and some of them as loose as what kind of tattoos they've got, and others have much more extensive jackets. And so the reality is, if it's just the Q&A, they're going to be able to do that pretty quickly. Look, I mean, we deported 25 people the other day. It's handfuls that the U.S. government can get their hands on with these folks. Some of them were pulling right out of prisons, so we know right where they are, and that'll be sort of the easy process going forward. It'll get harder when we have to track down gang members, but it does portend that what happens if they say, no, I'm not a gang member, like Mr. Garcia would have said out of Maryland, who was taken to a Salvadorian prison. He would have then been given, I guess, some more due process, which is what everyone has said he deserves. So I do think the Supreme Court has given Trump what he wants, which is license to deport under the Alien Enemies Act. And of course, that's the special powers that he has. But at the same time, expect some form of due process that, frankly, heretofore probably has not been followed.
Yeah, Rick mentions Abrego Garcia. By the way, that was Attorney General Pam Bondi. I want to be clear, not Press Secretary Caroline Leavitt in the White House driveway talking about this. Kristen, we've talked about Garcia's case. The administration admitted it should not have deported him to El Salvador. They called it an administrative mistake. Still in jail, profiled on 60 Minutes last weekend. Chief Justice John Roberts has temporarily stayed a lower court's ruling here that demanded he be brought back by last night. Does he ever come home?
I mean, I would certainly hope so. I mean, you talk about due process and how we just shouldn't be treating American, people living in this country. So, hopefully, I mean, the Supreme Court certainly is giving Donald Trump what he wants, but there is some semblance of due process going forward. Something like this doesn't happen. But when you have somebody like Mr. Garcia who has been put through an ordeal like this, and people take a look at this and they just don't think it's fair. It's egregious. And so, I think we'll continue to see some of these issues, but, for the administration to be so callous as to say, we're just not going to bring, we got it wrong, but we also don't have to bring him back. I think really rubbed people the wrong way. You put names and faces onto these stories, and it really resonates with people. And I keep talking about these demonstrations all over the country, where people have been rising up for any number of different reasons. And as we look towards the midterms next year, I think there are going to be serious repercussions for a lot of these, particularly, MAGA Republicans who are running in some of these more difficult districts. Because you're looking in states like Alabama, all 50 states across the country, and people is just not sitting well.
Rick, if you're President Trump now in a White House that's admitted it should not have deported this man to El Salvador, is there an opportunity to correct this? Welcome him back to the country? A photo opportunity? Or that just doesn't play well politically?
Well, it wouldn't surprise you to learn that there's a lot of different information coming out of the administration. Some officials have also indicated that he's a member of a criminal gang. And so I doubt if they're going to be hugging him anytime soon. It would redefine the hug a thug kind of slogan that we used to apply to New York's judicial system. So the reality is they're going to claim a mistake, but they're not going to try and clean it up. And until the court forces them to do so, I think their view is this is a problem that the Salvadorans have to figure out, not their problem now. And to some degree, since they don't have access to the individual today, they have to make a political decision as to whether they look pretty callous and have disregard for the man's rights if they don't find a way to try and get him back.
Rick Davis and Kristen Hahn will stay with us. Our great panel today has much more coming in the second hour of Balance of Power. Thanks to you both, as we'll also turn our attention to the big story at hand here today, and that's tariffs. We're trying to get to as many storylines as we can in our 2 hours here on the fastest show in politics, but boy, they keep coming. Watching Wall Street as well, and a relief rally. We'll see how long it lasts. We'll also compare notes with Charlie Pellet, his take on the markets, and a conversation next hour with Congressman Pat Fallon, the Republican from Texas, brings his view here on the tariff program that takes effect at midnight. I'm Joe Matthew in Washington. Glad you're along for the ride today. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's the Tuesday edition as we count down to reciprocal tariffs taking effect at midnight and China pledging to fight to the end. Wouldn't know by watching Wall Street, though. I'm Joe Matthew alongside Kaylee Lines in Washington with a relief rally underway. Kaylee, hopes for deals to be announced by the White House, but nothing really has changed yet.
Well, no, certainly not. We know conversations are being had. We learned about negotiations with Japan yesterday. President Trump today says he's also talking with South Korea. But for another country in Asia, it seems that we will not be so lucky as to see a deal before midnight tonight, as China is suggesting they will not flinch. And this is a quote, when trouble comes our way. And the U.S. official now telling Bloomberg that the U.S. will be moving forward with what is a cumulative 104% tariff rate on China, effective 11 hours from now.
Yeah, midnight tonight is when all of this happens. You can cue the countdown clocks. Beijing responding, in fact, through China's Commerce Ministry. The U.S. threat to escalate tariffs on China, a mistake on top of a mistake, pledging to fight to the end.
Yeah, and the question is going to be, of course, what is the consequence of that fight, both here at home in China and elsewhere in the global economy? And that is why the U.S. Trade Representative Jamieson Greer has been facing some pretty tough questioning in the Senate Finance Committee today about the ramifications of these policies.
Some of those questions coming from Republicans now, more of them, as even Elon Musk begins to openly question the direction of this tariff program at odds with many others in the administration.
Peter Navarro specifically, they haven't had kind words for each other over the last few days. So we'll get into all of that this hour. Get the take from one Republican, Congressman Pat Fallon of Texas, will be joining us in just a few minutes. But first, let's check in on how the markets are digesting all of this. It is an up day, but not as much as we were, Charlie Pellet.
Indeed, Kaylee Lines, Joe Matthew talking about that midnight countdown clock. I tell you, I'm more concerned about the 4 p.m. close countdown clock as of now, because the gains that we saw earlier on, they are fading fast. Yes, very much in the green right now, looking at an advance of just about 0.4%. But keep in mind, during the early going, we had the S&P 500 index surging by 4%. Right now, we have got the S&P up 19 points, 5,082, where we stand up by 0.4%. Keep it locked into Bloomberg Television and Radio for the latest on these markets. The Dow up 300 points now, up by 0.8%. NASDAQ Composite Index up 20. That is a gain of 0.1%. The 10-year, 4.16%, with the 2-year currently yielding 3.74%. Gold, little changed on the day right now. I'm calling it unchanged at $29.83. We've got West Texas Intermediate crude at 60 even a barrel, down 1.1%. Bitcoin right now down by almost 2%, 77,365 on Bitcoin. Barclays is scrapping its targets for boosting the diversity of its staff across the U.S., becoming the latest Wall Street giant to pull back policies amid pressure from Donald Trump's administration. Shares of Barclays, the ADR, is up today by 1.5%. For the first time in 15 years, ExxonMobil facing no shareholder proposals this proxy season. Again, recapping, S&P 500 index holding on to an advance of 0.5%, but the key takeaway at this hour, well off session highs. Balance of power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet keeping us apprised of what was buying the dip action today, maybe less so now as we're right around session lows. Perhaps the optimism that existed this morning around potential trade deals with U.S. trading partners is not necessarily feeling as optimistic anymore, as the U.S. official is reporting once again, or telling Bloomberg, that those 104% tariffs on China will go into effect at midnight, in addition, of course, to the reciprocal tariffs on all of our other countries and partners that we trade with that had already been announced last week. Although this is no surprise, as President Trump did say yesterday from the Oval Office that there was not going to be a pause for breath here.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. They don't want to be in the hands of the Chinese. And the Chinese have turned out to be really not very good at that. People that are with us, they're with us. But we cannot be taken advantage of any longer.
Although, as the president wrote on Truth Social, while referring to impending talks and a great call, as he called it, with the acting president of South Korea, he went on to talk about China. Also wants to make a deal badly, he says, but they don't know how to get it started. We are waiting for their call. It will happen. In the meantime, as Kaylee mentioned, 104% combined tariffs set to take effect on China, and that's where we start our report from Bloomberg's Tyler Kendall, who joins us live from the White House. Tyler?
Yeah, hey, Joe. So these tariffs expected to go into effect, those additional tariffs, midnight tonight. We have to keep in mind that President Trump had put forward a deadline of today for China to pull back on its planned retaliation that we are expecting to go into effect on April 10th, 34% levy against U.S. imports. We also have to keep in mind that the planned China retaliation includes some targeted action, including export controls against several critical minerals, as well as targeting some key U.S. agriculture sectors. We have to keep that in mind because that's going to keep coming up in these conversations, since we know that that is a pressure point for this White House. Reports indicating that senior administration officials are already starting to think of ways how they could potentially bail out farmers down the road if there is a significant loss when it comes to the U.S. agricultural sector. Also, as we look forward to what it could potentially take to make a deal, we do know from a statement earlier today, China saying that they would prefer a dialogue to resolve their disputes, but they are vowing to fight this until the end. You mentioned there that President Trump kind of reached out there of saying that he is waiting for the call from China, as we learn that some of these other countries are starting to call in, including South Korea and Japan.
Well, and I'm assuming we'll hear more from the White House just moments from now, Tyler, as the White House Press Secretary Caroline Leavitt is scheduled to hold a briefing this hour. But President Trump also has an EO signing on his agenda later this afternoon. What can we expect to hear from him then?
Yeah, so Kaylee, this executive order that he's expected to sign has to deal with American energy. According to our reporting, he's expected to try to designate coal as a critical mineral. We were just talking about critical minerals there, as well as try to boost mining of coal in the U.S. And Bloomberg News reporting that this is indicative of how this White House is trying to boost energy production when it comes to artificial intelligence, as well as data centers. Yesterday, as you know, President Trump in the Oval Office saying that he thinks the U.S. is leading the AI race with China, but one of the important parts to keeping that edge will be this electricity production.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. Now, as for how all of this is feeding into financial markets, we just got the run through from Charlie. Again, we are well off the highs of the session. What was at one point a 4% gain on the S&P 500 is now a gain of just 0.5%. And we want to get more on that now with Bloomberg cross-asset reporter Emily Grafeo. So, Emily, what was, it seemed, a buy the dip rally is fading pretty fast.
Yeah, we were experiencing our highest intraday jump in the stock market since November 2022, and that's fading. I think, Kaylee, the rally is a little sensitive right now. People kind of came in this morning and were buying. It's faded a bit, but really the word on Wall Street is that we just don't know how this is going to end. We don't know where to go next, but one thing is certain, and that is that volatility is high. When you look at the dip buying impulse, I write about ETFs. So the data comes in like day after day. So we don't know the buying, at least for today, but we did see yesterday that impetus still to buy the dip. You look at the ETF TQQQ. This goes 3 times leverage on the NASDAQ 100. It had its biggest inflow ever yesterday, $1.5 billion into that fund. It could be traders. It could be people trying to actually buy shares to short the fund. So it's hard to really glean a signal out of it. But we do know that that impetus, at least to buy the rally yesterday or the dip yesterday, was still kind of showing up in the ETF flows.
Emily, thank you so much. Emily Grafeo, Bloomberg's cross-asset reporter with her eyes on the markets. We'll see where we're at by the time we're done here at 2 o'clock. Remembering we had sizable gains when the opening bell rang this morning, as Kaylee mentions, might be petering out a little bit here based on some of the news flow that we've been following. Congressman Pat Fallon, the Republican from Texas's 4th District, is watching all of this happen and joins us now live on Bloomberg TV and radio. Congressman, it's great to have you. We've been hearing a lot of concern from both sides of the aisle, certainly in this hearing this morning with the U.S. Trade Representative, about the impact of these tariffs and exactly what's going to happen after midnight tonight. Are you hearing a coherent message from the White House that you can support? Is the president going to make the country stronger at midnight tonight?
Absolutely, and I am hearing a coherent message, and that is that there are I just was with leadership and they had just gotten off the phone with President Trump, and he said to them there was about 70 countries that have reached out to the administration and want to negotiate trade deals. So what it looks like it's shaping up, and I'm not going to panic at all, and I don't think anybody should, because things like this, you know, days and weeks, they should be measured in days and weeks. They should be measured in months and years. And I do think that we're going to see trade deals, really a cascade of them, that will strengthen this country, will put us in a better position, and I think the economy will show more strength.
Well, Congressman, as we consider that kind of time horizon, what are you telling your constituents about what they should be bracing for in the days and weeks ahead in the more short term compared to what you just described as the months and years ahead? Because this is consistently how we see it framed by this administration. Short-term pain for longer-term gain.
I think really what you're asking, Kayleigh, is how short-term is short-term? Is it going to be a few weeks?
Exactly.
Is it going to be a few months, et cetera? Don't have the crystal ball, but what I suspect will happen is that once we see these major countries making deals, like Vietnam, that would be that's a sizable deal. Obviously, the EU would be seismic, and then the markets will see, okay, we're seeing some steady stability, we're seeing some achievement, and you're going to see a slow isolation of China. And then it's up to them to make a deal. I know that they're going to have to save face and whatnot, but this trade war will hurt them way more than it will hurt us. We will experience some pain, no doubt, but they will experience it tenfold. So it behooves them to come to the table as well, and I think you'll see that. You just won't see it immediately for really, I think, egotistical reasons. When you deal with an authoritarian regime, that's juiced into the equation.
Well, they do like to buy some of our stuff as well, but we buy a lot more of theirs, Congressman. The U.S.-China Business Council finds that the 4th Congressional District, your district alone, exported $510 million worth of goods to China in the most recent year we have here, 2022. What could that mean for your local economy if those exports begin to slow?
The 4th Congressional District in Texas as a whole has a very dynamic economy, Joe, and if we were our own country, we'd be the 8th largest economy in the world. So 510 million, while that's a big number, you know what, our constituents are rooting for America and America's success. Unlike some other networks like CNN that was seemingly rooting for China, was an article I read yesterday.
Well, I wonder, sir, if more help will be required for their success if these tariffs indeed go into effect and last for some period of time. We obviously saw in the first Trump administration that farmers were offered subsidies. I wonder if you expect to see that again. Bloomberg has reported that Republican colleagues of yours are considering looking at potentially a tax credit for exporters. Would you be supportive of those kinds of measures? And is it worth it to spend more in order to raise revenue?
Yeah, I think that it's too early to talk about that or really seriously consider it, but we need to strategically decouple from China. Obviously, we're going to trade with them even when this is over, but the over-reliance that we've had on our #1 geopolitical competitor is alarming, and really COVID should have woken us up to that reality. And we're far too reliant on the Chinese right now, and this, I think, is going to act as a wonderful instrument to start that decoupling, and that's going to make us stronger. And we need to have more diverse trading partners.
We're watching Wall Street turn negative here. We just want to mention, after starting with a powerful rally this morning, a relief rally that seemed to be defying gravity considering the news that hasn't changed too much around tariffs. As the congressman mentioned, there was some hope for deals to emerge from these reciprocal tariffs, but hope appears to be fading on Wall Street. The S&P 500 turning negative. It's now up actually just by 4 points. The NASDAQ 100 is down by 24 points here as we make our way through the midday in trading. Congressman, are you hearing from constituents? Are they hitting the constituent line to ask about their retirement accounts?
There's a few folks, but it hasn't been really all that sizable yet. Because again, if you're an investor in the markets, you know that what happens over days shouldn't really concern you. That's more of a weeks and months. So let's see what happens 2 months from now. Will the markets? I personally think that the markets will be much higher in a few months. And I'm maybe an eternal optimist, but I do think that this isn't going to last. This is just very, very short term.
Well, speaking of short term, as you look ahead 2 months, Congressman, I wonder what's going to happen in your chamber in just the next 2 days, because the Speaker would like to see a vote on the Senate-passed budget blueprint, which I know a number of your colleagues in the House have taken issue with. Is it your expectation that the votes are actually there for that to pass this week and for reconciliation to advance?
Well, that's a great question. We had a conference this morning, and it's going to be a challenge, to be very honest. I don't know if we're going to have the votes. I hope we do, because all this is doing is, this is, like you said, it's a blueprint to move the process forward. There will be then a final product. I personally would not vote for a final product that doesn't have significant cuts in spending, because we need to work toward balancing a budget moving forward, considering we have a $36 trillion debt and climbing. We need to take our fiscal responsibility seriously, not just on the campaign trail, but actually here in Washington, D.C. So I don't know exactly what's going to happen. We'll see. But if we don't, then we're going to have to work together, and we have to extend the Trump tax cuts. We have to have a plan in place to go, and be a bit more disciplined fiscally. And so I hope that we can get there.
President writing on Truth Social last night, the House must pass this budget resolution, and quickly with the caps lock on. Congressman, will this actually get out of the Rules Committee to get to the floor? That might be the most important hurdle here, considering some of the Republicans who are concerned about the level of cuts in this blueprint.
Well, Joe, what we don't want to do is take it to the floor and fail. So we really have to count the votes. We have to do the whip counts before that happens. And again, I hope that it will. We're going to be having dinner with President Trump tonight, and we'll be talking about that. And if we have it, we'll go forward. But if not, there's always going to be a third way. It's not binary with it's either pass or fail. There are going to be third ways to get to that success, but we have to do it together. We have to have currently 217 votes to move it forward. So again, I'm praying that we can do it.
And finally, Congressman, we just have 2 minutes left here, but given your seats on the Intelligence and Armed Services Committees, I wonder what you make of the other news we got from the president yesterday about direct talks with Iran to take place on Saturday. What is your expectation or your hope that conversations will be able to yield?
You know, I very rarely am going to oppose having a conversation with another nation state, because, President Trump tried that in his first term with North Korea. Really, nothing came of it. But I really applauded the effort, because why not talk? And as President Reagan said, trust but verify. So even if you came to some accord, you have to make sure that their actions match their rhetoric in the pages that they signed in any kind of an agreement or treaty. So I do applaud talking. But, Iran's on the run. They are not strong right now. Israel has decimated Hezbollah and decimated Hamas, and even President Trump with his latest strike on the Houthis in Iran losing Syria, they're on their heels. So we'll see. It could just be all rhetoric. It could be for show, but we'll find out.
Indeed, we will. Congressman, thank you so much for your time this afternoon. Congressman Pat Fallon, Republican, representing Texas's 4th District, live from Capitol Hill with us here on Balance of Power on Bloomberg TV and radio as we track what's happening in politics and how it coincides with what's happening in the markets. A brief dip lower on the S&P 500 after a rally of as much as 4%. Right now we're up just shy, or just around 20 points, up 0.4% on the S&P.
VIX barely budging, and Bitcoin is lower today. It's hard to make sense of all of this, but we'll continue with our political panel coming up next here on Balance of Power. Looks like we're getting another bid under this market, Kaylee.
Yeah, we'll see if it lasts. This is Bloomberg TV and radio.
everyone on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index now little changed on the day. The NASDAQ Composite Index has just turned negative. NASDAQ now down by 6. Little change, down less than 0.1%, but red on the screen for NASDAQ. The NASDAQ 100 index is holding on to an advance of 0.2%. Keeping it all in context, S&P now little changed, up 5, up by 0.1%. But at the best level of the day in the early going, S&P was up by 4%. The Dow up 179, up by 0.5%. The Russell 2000 index is now down 1.6%. The 10-year 4.20% with the 2-year 3.74%. Spot gold is lower by $2, little change now at $29.81 the ounce. And West Texas Intermediate crude below $60 a barrel, $59.73 on WTI, down now by 1.6%. Walgreens Boots Alliance is reporting quarterly profit that exceeded Wall Street expectations, making it a strong performance in what's likely to be one of its last quarters as a public company. Last month, the chain agreed to be bought by Sycamore Partners for $10 billion in a deal that's expected to close by the end of this year. Again, Walgreens Boots Alliance shares are trading lower, down now by 1.1%. Recapping, S&P 500 index just turning negative again, down now by 0.5 point. NASDAQ also lower by 0.2%. Keep it locked into Bloomberg Television and radio for the latest on these markets. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Many thanks to Charlie Pellet, watching Wall Street for us every day here on Balance of Power. Thank you for being with us on the Tuesday edition here on Bloomberg TV and radio. The anxiety that's being felt over tariffs on Wall Street is being felt here in Washington as well, and not only by Democrats. Most Republicans on Capitol Hill have been behind the Trump administration on this. Most who you hear join us on Balance of Power speak to the short-term pain, long-term gain aspects of this. But there are some Republicans now who are beginning to vocalize their worries. Senator Ted Cruz is one of them, referring to Elon Musk as the angel on President Trump's shoulder. Tom Tillis, the Republican from North Carolina, made his views clear today, unless he was just, Kaylee, trying to get tape on himself in case the tariffs don't work out.
He is up for re-election next year.
We can play this back during a campaign. This was part of testimony from U.S. Trade Representative Jamison Greer before the Senate Finance Committee. Listen to Senator Tillis.
In this scenario, the decision maker who decided the alla prima approach, who has obviously had to have spent time anticipating what we saw in the markets and some of the pushback, I'm assuming this all got gamed out because it's a novel approach. It needed to be thought out. Whose throat do I get to choke if this proves to be wrong?
Yes, that was the quote. Whose throat do I get to choke? Well, Jamison Greer kind of reluctantly said, you can always look at me or talk to me about that, sir, as the USTR. But we want to talk to our political panel about this. Rick Davis is with us, Bloomberg Politics contributor and Republican strategist, partner at Stone Court Capital, alongside Kristen Hahn today, partner at Rock Solutions and Democratic strategist. Rick, are we about to see some serious Republican on Republican violence, either metaphorically or physically speaking, over this tariff issue?
Yeah, I definitely think we're entering the era where there's very little anxiety between Democrats and Republicans, because Republicans basically see this as a win or lose proposition amongst themselves. So now the question is, between Congress and the administration, who's going to pay, right? I mean, Donald Trump's the decision maker. There's no question that there's not a policy-making apparatus that includes the trade rep that's going to decide these tariffs. So he can do all the damage he wants, but that's like, hitting the fodder, not the target. And so the reality is, I think you're already starting to see cracks in the congressional armor around Donald Trump. And there's legislation in the Senate that is bipartisan that would take away some of the leverage that Donald Trump has to do these tariffs. And it'll be interesting to see how far that goes, because that echoes the Senator Tillis's comments, which is, if I trust you and don't vote for that measure and take it back into my own control, who's going to pay the price when I go down in my Senate seat?
Yeah. How does this play out then? Kristen, I'm guessing you're kind of enjoying watching this conversation. Senator Ted Cruz says there are angels and demons vying for influence in the White House. Picture Peter Navarro on one shoulder, Elon Musk on the other. Apparently, Musk did directly appeal to President Trump over the weekend to keep the reciprocal tariffs from taking effect. It will impact his business at Tesla. Peter Navarro says he's not really a car manufacturer. He's an auto assembler. How does all of this end? Where's the rupture in the administration or in the party that you see coming?
I mean, that's a very good question, actually. We're only 4 months into this administration, if that. And you're kind of seeing, I mean, you look at what's happening. The markets are just one of the things that's happening. But, you know, I think that the president has been Teflon for so long, and Republicans in the House and the Senate, for the most part, have stood behind him. And like you mentioned earlier, the talking point that everybody's using right now is that, you know, this is a major disruptive policy. We knew that going in. We knew that there was going to be pain. You know, I think he was saying you've got to operate or give medicine or something. You know, if you break it, you bought it. But you know, you're starting to see these certain cracks. And I think a lot of people are sitting there holding their breath, hoping that the markets rally and that, you know, the tariffs had their, well, Donald Trump's intended effect. But I think that there's going to be a lot of pain. And you're looking at, you know, a country like China. And what is the impact of these tariffs going to be on, you know, people across this country and their buying, ability to buy goods and services? When, like it or not, we rely on a lot of cheaper goods that come in from China. So, you know, people hired Donald Trump because they were being squeezed by inflation. They couldn't buy things at the grocery store. The cost of goods was far too high. But if he does stuff to make it worse, I think that you will see repercussions at the ballot box.
I want to go back, Rick, to this idea of the angel of Elon Musk and the demon of Peter Navarro, because they both clearly see each other as villains in this story if you judge their public comments about each other, including Elon Musk overnight saying Navarro is truly a moron. That is a direct quote, also calling him, quote, dumber than a sack of bricks. The White House press secretary, Caroline Leavitt, who is briefing reporters right now, was asked about this, and she says, boys will be boys, and we will let their public sparring continue. Obviously, Rick, these are grown men we are talking about in their 50s and 70s, respectively, but their public sparring, to allow it to continue, does that not undermine the messaging of this administration?
Yeah, for sure. I mean, this is just a cloud that kind of sits over the administration's effort to define what they're trying to accomplish on tariffs. And if it weren't such a dramatic impact, we've seen what's happened to the market since the president has embarked upon his tariff policy. You don't need a lot of noise in the system that's going to rankle those markets. And so the fact that one of the top advisors to the president, Elon Musk, who is also the world's wealthiest man and has 219 million followers on his platform X, is somehow picking a fight with the top trade policy person in the White House is crazy. I mean, no other administration would tolerate that. Either they'd be told to shut up and go to their neutral corners, or somebody would win that fight and the other person would be out of the administration. And so the fact that this is sort of gumming up what is already a challenging message narrative for the administration doesn't help the markets either. And so what we see today, after, you know, some optimism that there are going to be deals cut with places like Japan and maybe, you know, Israel. The prime minister was in the Oval Office yesterday talking about some of these things, has been overshadowed by the boys will be boys frat party fight. And China basically saying, as our largest trading partner, stick it. So, I mean, you know, I don't know which narrative you like, but neither one of those are going to fit a productive political scenario.
Kristen, Kaylee mentioned some of the nicer things that Elon Musk has said about Peter Navarro on Twitter. A couple of his posts were deleted, in fact, because they were so offensive. There's one that I could not read on the air here. if I wanted to keep my job. Is this how it ends with Elon Musk? Peter Navarro went to jail, I think we could say, for Donald Trump. I mean, that's pretty loyal when it comes down to who's going to survive this fight.
Yeah, I mean, I think when you talk about Donald Trump, I mean, we've always talked about how he kind of runs, whether it's his business or the White House, like a mob boss, dedication and loyalty seem to be the number one thing he cares about. So we'll see who comes out of this fight on top, but I totally agree with Rick Scott. I mean, I didn't think there was anything that could surprise me about this administration, but when you see two of the top advisors to the president of the United States publicly fighting, it's not good for anybody, particularly not their messaging going forward. So I guess we'll have to see this. What did they call it? A locker room? Maybe that was a previous thing they called locker room talk, or boys will be boys. That's just not a good answer. And frankly, they should come up with a better solution to this little spat.
Well, Caroline Levitt has had to answer more questions than just about this little spat. She was talking about specifically tariffs and U.S. manufacturing being brought back by them. She suggested that the president thinks the U.S. has the workforce to make iPhones. Rick, this is, of course, as we consider the supply chains of companies like Apple who left China or started to diversify away from China to other countries that are also now facing incredibly high interest rates. Even if we had the labor supply, do we have the desire on the part of the American workforce to work in that kind of manufacturing? Is there not a reason why it was outsourced to other countries aside from just the cheapness of that labor?
Yeah, look, I mean, you're almost at full employment in the United States, so where you're finding thousands of workers who are going to go into a factory and assemble iPhones and things like that, it would be a challenge. And the fact is that none of those things can happen overnight. I think conservatively, they're talking years to be able to recreate the manufacturing and forget about the supply chain, because the supply chain, that all the parts and materials and technology that goes into an iPhone is also built in China. And so where's that supply chain going to come from? Because we're ill-equipped to start manufacturing the kind of components that go into these kinds of units. Why? Because they're done much cheaper in other markets. So I think a lot of this talk about how we're going to bring back manufacturing in the United States needs to be accompanied with what kind of manufacturing. Are we really going to become the low-cost producer in the world? Of course not. We don't want to be, because we aspire to better things for workers in America than, a sweatshop. So, I mean, the reality is when you really open up the Pandora's box on this kind of rhetoric, you really wonder what it is we're trying to accomplish. Good jobs, high-paying jobs, technical jobs that would encourage people to get better educations. Yes, those are the things we're looking for here in the U.S.
Rick Davis, Stone Court Capital, Kristen Hahn, Rock Solutions, our great panel. As Howard Lutnick said on CBS Sunday Morning, the army of millions of human beings screwing in little screws to make iPhones, Kaylee, the kind of thing that's going to come to America. We'll see about that. Much more ahead here on Bloomberg. Stay with us on Balance of Power, live from Washington.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. Sentiment remains fragile with the S&P 500 index back in the green, up by 0.2%. Most of today's gains have evaporated. At one point, we had the S&P up roughly 4%. Right now, looking at an advance of 0.2%. Just moments ago, NASDAQ in the red, swinging between gains and losses. Right now, we've got NASDAQ up 10, up by less than 0.1%. The Dow is holding on to a gain of 230 points now, up by 0.6%. Again, the S&P 500 index, keeping it all in context, up by 0.3%. The 10-year 4.22% with the 2-year 3.73%. Gold down $4 the ounce, down 0.1%. And West Texas Intermediate crude 60.05 a barrel. Right now, WTI down by 1%. Bitcoin lower by 2.3%. Bitcoin 77,090 on Bitcoin. So again, recapping, traders keeping an eye on the latest tariff developments. S&P 500 index up 17, up by 0.3%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Many thanks, Charlie Pellet, live from New York here on Balance of Power. We're live from Washington as we cover politics in advance of reciprocal tariffs taking effect at midnight, with the volatility that we've experienced today and the concern that many have about the global economic impact that these reciprocal tariffs will have on top of the baseline tariffs. Bloomberg's David Weston sat down to discuss it earlier today with the former Treasury Secretary. This was earlier today on Bloomberg, Larry Summers. Let's listen.
I feel better anytime instability seems to be calming, but be not confused. There's only one reason why instability is being reduced, and that is there's a growing hope in markets that a larger part of these policies are going to prove transitory and reversible. This does not reflect any kind of market endorsement of the approach that the president has followed. Rather, it reflects a judgment that the president might recognize the reality that markets are telling him about, that many of his advisors are telling him about, that corporate CEOs across the country are articulating, that this kind of wholesale tariff policy is simply bad for economic performance. We're seeing some signs that the administration may recognize that.
We're seeing signs, but do we have a better sense of the goals in the process today than we got from the Rose Garden last Wednesday?
I don't think so. I think this is fundamentally a improvisational effort. You could tell that when you knew that there was a policy based on tariff reciprocity that didn't use any data on the tariffs of other countries in figuring out how to reciprocate. You could tell that from the blatant contradictions between what Presidential Advisor Navarro was saying and Presidential Advisor Treasury Secretary Scott Bessent was saying. You could tell that from the degree of division between close outside advisor Elon Musk and many members of the president's economic team. This is a policy, it's a hugely consequential policy, but by all appearances, it's being improvised on a daily basis, and that's creating huge uncertainty. But it's only uncertain, there's only uncertainty if things go in both directions. And today happened to be a day when things moved in a positive direction. I hope that the moves to back off these policies can continue, but we'll have to see. I suspect we're going to have volatile markets for some time to come, and no one can know, but my judgment is that I'd be surprised if the bottom is yet in with respect to this phase and markets.
How bad could it get?
Oh, I think the likelihood, I think it's more likely than not that we're going to have a recession. And in the context of a recession, we'll see an extra 2 million people be unemployed. We'll see losses in household income that are $5,000 a family or more. We're very likely in the context of a recession to see markets reach levels significantly below their current levels. So I think we could be looking for fairly serious economic problems.
That was the former U.S. Treasury Secretary Larry Summers in conversation with Bloomberg Wall Street Week host David Weston earlier today. Meantime, the current Treasury Secretary has just hit us with a fresh post on X about these tariffs, Joe. Scott Bessent saying President Trump's end goal is bringing back jobs and manufacturing to the United States, raising wages, increasing revenue, and reviving the American dream. He goes on to say that what they're trying to do is, quote, right the wrongs of long-standing global trade imbalances.
That's right. Different than raising revenue, for instance, to pay for tax cuts, as we seem to get together every day here, Kayleigh, to figure out which one it is. What is the drive? And maybe it's a combination they're in. Do baseline tariffs stay in place, generating that 10% to help fill coffers in the U.S., and we use reciprocal for negotiations? All of these questions are unanswered.
Well, and there are questions that we have as well for Greta Peisch, partner at Wiley Ryan, former general counsel at the Office of the U.S. Trade Representative, who is joining us now here on Bloomberg TV and radio. Greta, when we consider the prospects of this being a revenue raiser, if at least in part that is what the objective is here, to what extent will any revenue gains be offset by just lower trade between the U.S. and its trading partners? Because we've heard from many economic minds that it is expected that the actual volume of that trade will go down, and that impacts the overall number you could bring in, right?
Yes, that's exactly right. As you raise the tariff, you would expect demand for imports to go down. And in fact, that's what the administration says, that in part that's what they want to do by creating incentives to move manufacturing here. So if your primary objective is revenue raising, what you may want to do is have a relatively lower tariff on a broader base of imports, which sort of sounds like that 10% base that they've already put in place that came into effect on Saturday. Higher tariffs, of course, are going to drive import volumes down and ultimately lead to less revenue collection.
We heard from the U.S. Trade Representative Jamieson Greer in testimony earlier today. He's got 2 days worth today in the Senate, where he spoke with Senator Bennett, Michael Bennett of Colorado, about the impact of these tariffs. Let's listen.
What is it the American people should expect to be able to suffer as a result in terms of rising prices?
I think there's not really a one-to-one on tariffs and price effects, and so many things go into price. I know you think I'm probably like dodging and weaving on this, but I'm looking at data.
I know you're smart enough to know that the likelihood is that prices are going to go up for the American people as a result of the tariffs.
Was he dodging and weaving there? I'm trying to understand where the administration is on this, because we hear a lot about a one-time impact. Wall Street's factoring in, it looks like, a lot worse.
Well, you know, it isn't so much a dodge and weave in the fact that, you know, inflation has a lot of components that go into it. It's a macroeconomic indicator that isn't just driven by tariffs, and in fact, often it's something else going on, the labor market, supply, demand. In the past, you know, we haven't seen tariffs drive inflation. Even in the first Trump administration, when tariffs went up quite a bit on China, and that felt like a lot at the time. Of course, now what we're talking about is much bigger. That action did not cause inflation or other tariffs that have been put in place in the Trump administration and other administrations. We just don't usually think of tariffs as being an inflation driver. This is a big experiment of a much larger trade action than we've ever seen. So in part, we'll have to wait and see and how it interacts with other parts of the economy. But I think his comment is valid in the sense of looking back at how we usually think about tariffs and their magnitude and their impact on the economy, it is a bit complicated as to how they get baked into prices and what their effect is.
Well, I'd like to talk about one specific magnitude of tariffs on one of our trading partners, Greta, and that is China, because in addition to the 20% tariffs that have already been put into place to combat what the White House argues is the trade of fentanyl, and 34% in terms of the reciprocal tariff rate it was already intending to impose at midnight tonight. The White House has confirmed today it is going ahead with that additional 50% tariff on Chinese goods, bringing the effective rate to 104%. With a level that high, Greta, what is realistically going to happen with the trade relationship between the U.S. and China and the flow of goods?
Well, like all of these tariffs, I think the big question is, what is the end game? What is the administration attempting to achieve with these tariffs? And it may be different, and likely is a bit different with respect to China than with respect to other trading partners. But I think a question here is this about decoupling from China? Is it to increase leverage to have a negotiation, which it seems like at times the president may have alluded to? Those are very different outcomes. And China is going to have its own, as every trading partner has, its own prerogatives and its own domestic economic and political imperatives that it has to answer to. And so, I think at this point, we don't fully understand what the administration's strategy, what the president is hoping to achieve with this further increase in tariff. But I think it's certainly going to be a consequential action and potential discussions with China going forward.
Does the U.S. Trade Representative's office model this, maybe in conjunction now with the Secretary of Commerce, to kind of play this out, to see what it is we're actually asking for? When you hear Howard Lutnick talk about iPhones being assembled in the U.S. once again, we heard from Dan Ives on that. The analyst said that would mean basically a $3,000 iPhone. Where becomes the line of diminishing returns when decisions like this are being made?
I mean, it's a great question. And again, we don't know what's in the mind of the administration and the president and what they're hoping to achieve with these tariffs and negotiations. Just a few minutes ago, the press secretary, Caroline Leavitt, said that the president was directing members of the trade team to come up with tailor-made deals for trading partners that are unique with respect to the trade relationship, imports, exports, the barriers in each of those markets. So that indicates that, it may be a different scenario for each and every one of this over 100 trading partners. But again, we don't have a clear sense of what the ask is and what the end state is. Where do they want to be in 9 months, in 18 months? What do they want the tariffs to look like? And what do they want the results of any negotiations to be?
And finally, Greta, in our final moments with you, given that you were general counsel at the USTR, do you have any hesitations around the actual legal mechanisms with which President Trump is acting to enact these tariffs? Because there are now movements in Congress toward kind of wresting back congressional authority through a resolution to exert that Article I privilege to actually be the ones in charge of tariff policy. But how would all of this stand up in court?
Well, Congress certainly has the ability to take action to counteract or address the trade policies that have been enacted by the president so far. And yes, there are also rumors or in even one case that's been filed to challenge some of the tariffs that have been put in place since President Trump came into office. But I think there's a lot of question marks there. He is stretching these authorities in new ways and using them in a magnitude that hasn't been attempted before. But and so we just don't know what the courts are going to do with that and whether any of these challenges will be successful. But I would just say that even if the courts are successful, or even if litigants are successful in challenging some of the actions that have been taken place so far, the president has other tools and authorities that can be used to put tariffs in place. So You know, he is committed to this policy, it would seem. He thinks that tariffs are effective in addressing these issues, and he'll find a way to do it.
Greta Peisch, Wiley Ryan, former General Counsel, the Office of the USTR. Greta, many thanks for the conversation. We've got a lot more ahead. Hope you'll join us on the late edition of Balance of Power. That's at 5 p.m. Eastern Time, right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on TV, radio, YouTube, and Bloomberg Originals. I'm Carol Masser, along with Tim Stenivek. And as you said, man, I don't know, did I bring back kind of this market malaise?
Welcome back. You missed a day yesterday, but yesterday's like, okay, hold my beer. How about today?
Listen, we had a rally at the beginning. Almost every name in the S&P 500 was higher, and now we've got kind of an even split, 242 to the upside, 260 to the downside. So manic market, anyone? I think we can say yes. And that after stocks did see earlier on their biggest rally since November of 2022, but we're definitely off our best levels.
Yeah, off our best levels. We got 2 hours to go with today's trade. We're going to continue to bring you the latest, keep you locked in here to Bloomberg and Bloomberg Business Week. We're going all in on the markets and the economy this afternoon. Was it a bounce? Was it a bottom? Can you say dead cat bounce? Somebody already texted that to me, Carol.
Did they really?
They did, yeah. What earnings estimates overall reveal?
Yep, that means Gina Martin Adams coming our way in just a moment. Also, the world is finding a plausible alternative to U.S. Treasuries. Yep, you heard it here. It's one of our most read stories on the Bloomberg.
Plus, all of this is emanating from Washington, D.C., specifically the White House. We are going inside the White House to what's being overheard on countries that are looking at a tariff deal.
And on all of that, Elon Musk has a few choice words for the architect of the president's tariff plan. How many times can we hear the word moron?
Is that what it was?
Moron?
I'm pretty
Moron.
sure it was moron, yeah. Also, can the tech giants really bring their supply chains back home? I've just heard no, no, and no over again.
I know. Is that the truth? We're going to try and get a reality check on that. Hey, first up, let's get to the trade. As we said, we're near our worst levels of the session, still in the green. Here's Charlie Pellet.
Hi, thank you very much. Welcome back, Carol Massaro. Let us get right to the numbers here because you got to be keeping track of what's going on today. And of course, right through the close, we got you covered on Bloomberg Television and Radio. S&P right now up 16. That is a gain of 0.3%. Best level of the day, we had the S&P higher by 4%. Dow Industrials up 263, now up by about 0.7%. The NASDAQ Composite Index up by 0.2%. Keep in mind that both the S&P and NASDAQ have been swinging between gains and losses. The 10-year at 4.24% with a 2-year currently yielding 3.76%. Gold flat on the day now, up just $1 the ounce, $29.84. West Texas Intermediate crude holding at $60 even a barrel, lower now by 1.1%. Bitcoin down 2.2%, 77,185 on Bitcoin. Microsoft has dismissed 2 employees who disrupted an event celebrating the company's 50th anniversary. Now, both employees worked as software engineers and are affiliated with No Azure for Apartheid, a group that has protested Microsoft's sales to the Israeli military over the country's conduct in its war in Gaza. Microsoft now up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so much for an earlier rally as volatility in U.S. stocks once again taking over. We also got a headline, which everybody's been kind of doing the math on this one, but we thought we should bring it front and center, that the U.S. is moving forward with additional tariffs on China with the rate of levies totaling 104%, this according to a U.S. official.
Well, stocks hovering at near their lows of the session. They did dip into the red a little earlier today, but the S&P 500 gave up quite a gain. Bloomberg's Gina Martin Adams notes in new research that the panic is evident, but it may not mean a bottom in stocks is here. Gina is a Bloomberg Intelligence chief equity strategist. She leads the U.S. equity strategy here at Bloomberg Intelligence. She joins us from New Jersey. Gina, that earlier bounce, the fizzling, why? What happened?
Well, you know, in any given day, we can all speculate as to what happens. But I think broader, sort of bigger picture is we did have some evidence of capitulation emerge on Thursday and Friday. Investors are trying to buy that dip, but whether or not it's the ultimate bottom is still very much in question, particularly considering where valuations are, where implied earnings expectations are, and the fact that we're just getting into first quarter earnings season this week, and we've got a good month of reports to sift through to try to get a sense from companies as to how they're going to handle this tariff environment now.
Well, and I want to talk about earnings in a moment, but I want to ask you about something I heard on Surveillance on Bloomberg Radio this morning with Tom and the gang, and this guest made the point, and I just want to make sure I read it right. Companies that sold off the most were those with strong balance sheets, and that was a great opportunity to buy those names. Do you agree just because a company in this environment has a strong balance sheet going into the tariff news means that is a buying opportunity?
Well, I wouldn't expect the balance sheet to become a huge issue until we get signs of credit distress. Instead, I think that the bigger issue to trade in the market right now is what's going to happen with earnings. I mean, frankly, we're going from an average tariff rate of under 5% to an average tariff rate of 20% in, the blink of an eye. And that is going to create tremendous disruption to supply chains, pretty significant disruption to margins. The earnings outlook is definitely under fire. We're seeing that with vicious analyst estimate revision lower. I think that while if you may be using the balance sheet as a safety trade for the long term, in the short run, you've still got to price in near-term valuations what's going to happen with earnings and cash flows. And I do think that that's probably going to be an overwhelming driver. I think for a safety trade, beta is actually probably a better measure in the short run, just because the pace of downward estimate revision could get quite vicious. And we certainly have really yet to see the bigger economic impacts of these tariffs emerge. So I think we can, argue all day long on what component maybe offers a little bit of safety, but I'd go for probably beta or, general defensive qualities in the stocks over a balance sheet number, at least for the near term.
Gina, we're going to be talking to Tom Orlick in our next hour about all the uncertainties that are out there. But with regard to what is known right now and the way that earnings will be affected as a result of these tariffs increasing to such a degree, why don't you think it's totally priced in at this point? Is it because we just don't know where it's going to hit?
Yeah, it's a great question, Tim. I mean, I think that we can argue all day long again about what's priced and what's not priced, but for starters, we're trading at a multiple of 18 times earnings for the S&P 500. We've not experienced a recession in which the price-to-earnings ratio bottomed anywhere near current levels. As a matter of fact, it usually gets all the way down to 15 or below in any kind of recessionary environment or even earnings weakness climate. It doesn't have to be an economic recession, could just be an earnings recession. And we just haven't seen that. So we're still priced for fairly robust earnings growth to emerge. Our model actually suggests that even with the declines we saw last week, the market is still priced for 15% earnings growth to emerge this year, which is historically anomalous even in a great year, let alone a year that is riddled with economic risk. And even the leading indicators of economic risk of the economy would imply a significant degree of earnings risk has emerged even prior to the tariffs. Something we wrote about last week are things like durable goods orders, as implied by the ISM's new order survey, would suggest that you have an outlook for an earnings contraction emerging, where the consensus implied in the equity market is now for 15% earnings growth. So that's a really big spread between expectations implied by market prices and what is a likely earnings reality. So I would say that valuations are the biggest reason to answer your question in short form.
Hey, listen, Gina, in your research, you say panics in 2001, 2008, 2015 all occurred more than 22 weeks before ultimate market lows, and the average 6-month S&P 500 return afterward was down 9.5%. Can we put what we're seeing in that category?
It seems that way. I think, Carol, we have to be fairly nimble, right? Because these tariffs obviously could be reversed very quickly through words, through tweets, what have you. So we have to be very nimble. But assuming that the tariffs that were announced last week are put in place for next week, we definitely have a significant amount of downside risk, or at least volatility, to expect in the short run. We certainly have downward estimate revisions, and most likely we have some form of an earnings recession that emerges in 2025. Earnings recessions tend to play out very different in price dynamics than short-term corrections in the equity market. And that's what we meant to sort of highlight with that note is, when you have a 10% correction in stocks, capitulation measures can be fantastic measures of what to expect. You can use capitulation, you can use sort of risk-on, risk-off measures as your only guide in a lot of ways to finding those 10%, sell-off lows. But once you get past a 15% correction, you're flirting with recession kind of climate. And we know that the earnings outlook is diminishing materially. If we're headed into an earnings recession, you can expect a period of longer-term volatility. At least that's what the history says for us.
As Gina's been talking, I've been keeping an eye on the S&P 500. We took another leg lower, down about 0.1% on the S&P 500, so back into the red. Hey, Gina, before we let you go, just 30 seconds on what happens if there is a reversal Is the damage already done for some of these companies?
I think it depends upon the language behind the reversal. If the reversal is perceived to be short-term, then the damage probably persists. The reversal has to be very clearly communicated as a permanent change. I think the biggest problem that the equity market has been facing so far this year, and maybe continues to face, is this uncertainty and this lack of confidence into where things are headed. And there are a lot of give and take sort of commentaries in the marketplace about where we won't, we, will they. You know, the question marks are still tremendous.
Right.
And so we need certainty in order to set operations and move forward.
I keep thinking of that interview that Sonali Basak did with Boaz Weinstein, and he said, we got 4 more years, or roughly, of this administration, and the uncertainty genie is already out of the bottle. And so you got to kind of, maybe, at least his perspective, think of things that way, that you can get a change and then you can get a change again. Gina, we know we'll come back to you a lot. Gina Martin Adams.
Gina should be celebrating some sort of NCAA win.
Are you happy over that?
I am.
Florida Gators?
I am very much celebrating that win amidst all this turmoil. So thank you, Tim.
Congratulations.
All right. Gina is, of course, Bloomberg Intelligence Chief Equity Strategist. Hey, folks, that's our equity trade. We got to get to the U.S. Treasury trade. That brings us to one of the most read stories on the Bloomberg today, how in the first rush for safe havens in years, global investors, Tim, are finding there are credible alternatives, yes, folks, to U.S. Treasury bonds.
With more, we welcome back Michael McKenzie. He's Bloomberg News rates reporter. He joins us here in the Bloomberg Business Week studio. Is the world really finding a plausible alternative to U.S. Treasuries, Michael?
It's beginning to. I think the decision by Germany to release the fiscal brakes, they're going to be delivering and issuing a lot more bunds, which are top quality European debt. Germany's debt to GDP is much, much lower versus many other G10 countries, particularly the US. And in Japan today, we've got a 30-year JGB yielding 2.5%. So if you're a fund manager, a life insurer, pension plan in Japan, you can probably stay domestic now. You can use a bit of repo, lever that up, but why are you going to come to the US? And if we look at how a lot of investors who buy US Treasuries from both Europe and Japan, they tend to hedge the dollar exposure. Well, once you take that out of the equation, essentially you should stay home. And I think this is going to be, it's a trend that's beginning, but it's going to continue.
So 3.7 on the 2-year, and if you take it further out, 4.2 on the 10-year, that's not enough, you're saying, that the risk...
Not if you want to hedge the currency exposure. And there's a lot of question marks around the dollar now. But above all, what Japanese and European investors really don't like to see in the bond market is uncertainty. And we've got a lot of uncertainty and, frankly, policy chaos, contradictions every day regarding tariffs and implementation that's coming from the Trump administration. And they're putting Scott Bessent out there every day now to talk to the media to try and hose it all down.
Right.
But it's not working, because today we had a 3-year auction in Treasuries. There was a big drop in the direct bid, which is normally where you'd see reserve currency managers coming in from overseas and going directly to the Fed. They dropped off today. That bid was really low. So that's a warning sign. And since that auction at 1 o'clock this afternoon, 30-year yields are now up 10 basis points. 10 years are also up about 4 or 5 basis points, because we've got a 10-year auction tomorrow.
Right.
We've got a 30-year auction on Thursday. We've got CPI coming out on Thursday. And that CPI is still going to be above the Fed's target. And that's before tariffs. So there are a lot of jitters here in this bond market.
I think this is so important. This is something we talked about on our call, that, even when we saw, the disconnect between either stocks selling off but yields going up, like trying to understand. And I think there are some people, who might be listening, be like, why do I care? What do I care? Like, or I do want yields to go down because maybe that means I can get a mortgage or something, to break it down. But it's important. It tells you what about global investors and their relationship potentially with U.S. Treasuries?
Well, it tells you that they're beginning to doubt the ability of the Trump administration to get spending down. They're beginning to doubt Scott Bessent's claim that, yes, we're going to get lower 10-year yields, because the math doesn't add up. And I've heard from a couple of investors this week, look at what's happening in Congress. They're moving towards some big, beautiful bill, which is what Donald Trump wants. But the real talk here is that it's going to include more spending. The deficit isn't going to come under control. And that's why you're beginning to see the 10-year and the 30-year yields rising. They're not participating in the haven trade. So let's think back to last September, when the 10-year yield got down to 360, because the market was worried we're going into recession, and the Fed cut by 50 basis points. This time, even with all the dramatic stuff going on since Liberation Day, The 10-year barely got below 4%. Now it's back to 4.25. Something has broken in the Treasury market. It's not behaving the way it was last September. And the change is really the chaos in the White House. And I think that the market is telling you something very important.
Is the chaos leading to, or is the market telling us that there are starting to be questions about the full faith and credit?
I wouldn't go that far, but I'd say it's more along the lines of what PIMCO said late last year. You've got to be vigilant. It's not about bond vigilantism, it's about vigilance. And this is a bond market that is becoming more and more vigilant. They're not really believing the Trump mood music here. And the chaos around tariffs doesn't help things. And the fact of the matter is, the U.S.
Meaning
Treasury,
they don't buy that this is going to get to a better position for the U.S. economy.
they don't see what the end game is here.
Okay.
How does Donald Trump get a win on tariffs? It doesn't add up.
Well, and just real basics, this is, the bond market's your baby. But, I mean, essentially then, if international investors aren't so interested, or investors in general aren't interested, you're going to have to pay higher and higher rates, right, to attract?
Yes, but then let's step back, right? So what's happened this week and last week is that I believe there's a lot of damage being inflicted on business confidence and consumer confidence. So the economy is going to slow. It was already coming into a soft landing. That's now in question marks because we could actually see activity really drop. So in that world, taking down 10 years at 4.5, if it gets to that level, even higher, is a good long-term trade. And you've got plenty of people who do that. On the other side, though, you've got now investors saying, well, I have alternatives to treasuries if I'm in Japan and Europe. So that's going to mean that the domestic buyer in the US, who has been the biggest buyer of treasuries in the last 10 years, will have to continue to support. But all things equal, if people begin to see that budget negotiations involve more and more spending, then more supply. And that means you have to have more of a premium in 10-year and 30 years. But the other interesting thing here is what's the Fed going to do? Because the Fed's reaction function is we have a dual mandate.
Right.
If inflation does pick up in the coming months, they're not going to move. But then what happens if payrolls really begin to fall?
Yeah.
Then they're kind of stuck. And again, you'll see the front end do okay, but the back end is where people can go, well, actually, if the Fed's not really going to move that much and can't move that much, then yields are going to be stuck, particularly if there's more supply coming.
Which isn't good for the U.S. economy in the long run. Yeah, which is why we're talking either stagflation and some other things. I was going to say miserable Monday, but it's actually Tuesday because I was off yesterday, so I'll just call it terrible Tuesday. Michael, thank you so much. Really appreciate you explaining it. As we said, this is one of the most read stories on the Bloomberg News rates reporter Michael McKenzie. All right, folks, you're set for the markets on Tuesday.
Dumber than a sack of bricks.
Me?
No, not you.
Ouch.
That would be a very rude thing for me to say to you.
It would be.
I would never say such a
You
thing.
moron.
Oh,
No,
wait.
just kidding.
Those are two things that Elon Musk has said about President Trump's trade counselor. And even if the administration is right about all this, can we really bring in the highly globalized tech supply chain back home? That's next on Bloomberg Business Week Daily.
We don't feel that way, really, about each other.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks giving up most of the earlier gains. At one point, we had the S&P 500 index up 4%. Right now, we are looking at a gain of 0.2%. The S&P up 8, now at 5,069. The Dow holding on to a gain of 197 points, up 0.5%. NASDAQ Composite Index back in the red right now, down 5 points. NASDAQ and the S&P have been fluctuating between gains and losses. The 10-year yield at 4.25%, with the 2-year currently yielding 3.72%. Gold, little change now at $29.83 the ounce, up just 40 cents. West Texas Intermediate crude below $60 a barrel, $59.67, down now by 1.7%. And Bitcoin is down 1.9%. Bitcoin at 77,419. S&P 500 index erasing what was earlier the largest rally since 2022. So again, recapping here, stocks little change now, with the S&P up by 1 point. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So as you know, Charlie's been reporting, U.S. stocks were bouncing back. I mean, right now we're green across the screen, but just barely on the S&P, just up about a point, as you heard from Charlie. NASDAQ 100's up about 20 points. But earlier in the day, we saw the Mag 7 as a whole up more than 5% at their highs today. And
now in the red.
Yeah, exactly. So it's definitely turned around. We did talk about earnings with Gina Martin Adams, and she, in her latest research, she talks about that outside of tech, revenue is rapidly weakening.
Well, we wanted to check in once again on what's going on with the tech group and whether or not we really could bring tech supply chains back home. Back with us is Bloomberg Intelligence senior technology analyst Anurag Rana. He joins us from our Chicago bureau for Bloomberg News. Anurag, has anything changed in your view when it comes to tech names since the sell-off began following the tariff announcements?
No, I mean, I think it's the same news back and forth. You know, there are certain companies like Apple who are directly impacted of the tariffs, but the rest of the space, I mean, entire software space, for example, it's going to get impacted in a very indirect way. We, published a big note on that today, because that's going to happen because of the lack of business confidence and CEOs not spending as much as they were before. I think, there is nobody that's going to be left spared because of tariffs.
Yeah, I know it's something we've talked about with you before, Anurag. How is it, and I feel like every conversation we have, it's like, but wait a minute, what if the president reverses everything and does a 180 on tariffs? Does the outlook come back, the better outlook?
See, one of the things is I think we think some of the demand is destructed at this point. The question is how much. And we don't know how that's going to shape up till we get into the earnings season, till we look at guidance coming in for the next several quarters. I mean, I think we commented last time we were talking to you that when you look at a company like Accenture, I mean, they're talking about their end markets or their clients not spending as much as they were before, or they're rethinking about their projects for the next 12 months. So there is going to be some destruction no matter what happens tomorrow.
Why are you saying that there is demand destruction already present, even though we haven't seen these completely enacted? And yes, you brought up Accenture as an example, but in terms of the Mag 7, the big tech companies that you follow each and every day, why are you already concerned about demand destruction?
So one of the first things we see if there's a recession, if there is a drop in business confidence, companies do stop spending on a handful of things, such as consulting projects, such as buying new hardware equipment that is not AI related, buying more seats for the software that they are upgrading, hiring new people. All of these things do come to a stall immediately when they are worried about an economic downturn or a recession.
One of the things I want to just kind of hammer a little bit too is tech supply chains, and this is something too, Anurag, that we've talked about with you. Can they be recreated in the United States? Can they easily be recreated in the United States?
See, the word, if you say it's easily, that's not. I think there's something that can be done easily. Now, can it be done? Yes, if you do a lot of government subsidies, you figure out a way to bring more automation. But again, that's something that's going to take years. You cannot. It's not something you can just pick up and start doing it, something that has been created over a 20, 30-year period.
And what's the benefit of that? Like for someone who might say, well, wait a minute, why don't we bring it back and let's deal with a little bit of pain and we'll get through it and then we'll have more manufacturing in the U.S. what is the benefit of having a global supply chain? And I know there's often people say you get every country doing the best thing that they can do and kind of contributing, but how do you see it? How do you explain it?
Yeah, so you see, for us, the benefit of a supply chain, for example, in the case of Apple in China and other parts of Asia, is they also get to sell their products into their end markets. I mean, China is the growth engine for Apple. At the end of the day, that's one of their biggest markets for either it's the phone or any of their tech products. So it is critical, because otherwise, where is the growth going to come from? In the US, you're coming to a point where smartphone penetration is probably saturated for now. People who have the nice iPhones already have it. Maybe you're going to have somebody upgrade from a lower end phone to a higher end phone, but that's not going to drive 6, 7, 8% product growth rate for any of these companies.
All right, going to leave it on that note. Hey, Anurag, thank you as always. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. By the way, looking at shares of Apple, Tim, they're down another 3% on this Tuesday.
Meantime, there's a growing chorus of well-known names questioning the tariff strategy, and that includes a billionaire presidential advisor Elon Musk, who attacked the White House trade counselor Peter Navarro as, quote, dumber than a sack of bricks. This is a fight over President Donald Trump's tariff regime spilled onto social media on Tuesday.
But
that's not all he said.
He said, wait, no, this is kind of crazy. In a flurry of posts on a social media platform, Musk calling Navarro truly a moron and mocked the trade advisor for the past, citing the work of Ron Vera, a fictional expert whose name is an anagram of his own. How old are these people?
That guy was quoted, though, in Navarro's book.
Okay.
So,
with all things Elon, we've got Max Shafkin with us. He's Bloomberg Business Week columnist, co-host of the Elon Inc. podcast, who has to deal with this on a weekly basis. He's also the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. He joins us here in studio. I got to ask you, is this a real battle that's going on? I mean, I'm trying to get, is the relationship between Trump and Elon really over? Is Trump using Elon to maybe look for an exit ramp because the tariff stuff's going so well? How are you?
I mean,
together?
look, just recently, I think a week and a half or so ago, Elon Musk was in with the cabinet wearing a hat that said Trump was right about everything. So this does feel like a shift. I think it would be wrong to say, oh, Elon is out, he's outside the circle of influence or something like that. Whatever happens, however long Elon Musk runs Doge, he is going to stay close to Donald Trump, I would predict, for a long time, because there are mutual interests here. Trump is going to want that for the midterm, and Republicans are going to need that. That said, there's sort of two forces at play. One is Republicans took a pretty bad loss in Wisconsin last week. Elon Musk played in a big way, donating probably more than $20 million all told, maybe even more than that. We don't know the exact number yet, to promote this conservative judge in a state Supreme Court race. The candidate supported by Musk and Donald Trump lost by a wide margin. So that kind of calls attention to the political risks. And the second thing here is that Musk and Trump do have, differences on trade policy. Elon Musk runs a globally integrated company with a huge presence in China. Donald Trump ran as the tariff guy and has, just for laughs, sometimes insults China. So there is a divergence here, and I think we're seeing that divergence both for political reasons as well as economic ones.
Why isn't he saying President Trump, you're a moron? Or why isn't he saying President Trump, you're dumber than a sack of bricks? Why is he picking Navarro when everyone says, and this is not me speaking, but it's just everyone says that ultimately the tariff policy comes down to what President Trump wants?
Well, if he did that, that would, that would probably cross the line for Trump, right? Okay. It's one thing to criticize an advisor. I think there's been a lot of reporting on this. Trump seems to like having, conflict within his inner circle. There's kind of a reality, you got to remember he ran a reality show for a very long time, or started a reality show for a very long time. He likes that kind of feeling. This is, in a sense, right, great content. I also think, Musk is picking on Navarro because Navarro went on, I believe it was CNBC, and described Tesla as an assembler rather than a manufacturer, which if you know about anything about Elon Musk, that is the worst insult you could deploy against. So genuinely, I think he was hurt or angry, and he is reacting to it. So, and of course, also Tesla has this is gonna cost Tesla money is the other thing.
Does Elon have enough sway over President Trump to move the needle when it comes to this policy?
We had a long discussion about this for the episode of Elon Inc. that's going to hit in a couple of hours, the podcast that Bloomberg hosts about Elon Musk. And, you know, it's not clear. It seems like Musk's influence within Trump world is pretty bad. He's talking to Trump all the time, so he can obviously walk in or call Trump pretty much whenever he wants. That said, it seems like he's been involved in the Doge part of this, the cost cutting, you know, remaking government, as well as kind of some of the political pageantry around Donald Trump, and that folks like Navarro are really in the inner circle on tariffs. And Nancy Cook, our colleague on the podcast, pointed out, give you a little sneak preview, pointed out that attacking Navarro, I mean, he is one of Trump's, you know, one of the people in the inner circle. This is a real shots fired across the administration. We have two very trusted advisors going at it, as you said, Carol, in public.
I mean, it's like your favorite kids, right? Sorry, Eric and Don Jr., but it's like your favorite kids kind of going at it, right? And so I just trying to understand the optics of it.
Yeah, I mean, I think the other thing that's happening is that when Elon Musk was backing Donald Trump, and especially in that period after the election, Tesla was looking very strong. You know, the stock went up. You know, he was really on top of the world, and maybe he felt like he could afford to take a hit to his margin, to, you know, have to deal with the inevitable price increases that this is going to lead to. But what we've seen in recent months is really serious demand challenges. You know, it seems like demand for Tesla has fallen way down. Like, this company is just not as healthy as it was a few months ago. And I think that may also be pushing Musk to push back more strongly than he otherwise would have if he were feeling, you know, more confident in his position business-wise.
I mean, there's a fundamental disagreement in terms of what Peter Navarro thinks and what Elon Musk thinks. I mean, there was the Milton Friedman video that Elon tweeted in the last couple of days talking about free trade and who works on a pencil. And I guess the question I have is this enough to push Elon away from this universe? Because, you know, he said a lot of positive things about President Trump in the last few months, loves him, supports him, everything Trump has done is right. But this is a really big deal. And this seems like something that the president is digging his heels in on.
Yeah, I don't think he's crossed a line yet in this kind of back and forth with Navarro. And I continue to think, just because Trump has a lot to gain from maintaining this alliance, you know, Elon Musk could donate another $300 million in the midterm.
But he might not be useful to Elon.
Well, I mean, $300 million is going to be useful. But the question is, what does it mean for Elon?
Exactly, that's what I'm saying. This might no longer be useful to Elon if he's not getting what he wants.
That is what's worth paying attention. Like, if you want to see what's going to happen with Elon Musk and Donald Trump, the thing I would be looking at is the Tesla stock price and how well does that hold up. You know, it's been a bad couple of days. I think it was up earlier today. It's down a little bit last I checked.
It's down 43% this year, and it's right now down about 1.5%.
I think that is the thing, you know, if Tesla is really in trouble, that is the thing that could push Elon Musk away.
When does the Elon Inc. next
Somewhere between 5 and 6 o'clock, you know, it's...
Must listen, everybody. Max Chafkin, Bloomberg Business Week columnist. Still ahead, everybody. The only game in town really, really is what President Trump says next on tariffs. We've got the latest from the White House when we come back on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. It has been another volatile trading session with the S&P swinging between gains and losses. And right now, just about the lows of the session, down 19 to 5,043. That is a drop now of 0.4%. Dow Industrials up 32, up 0.1%. S&P, by the way, I mentioned down 0.3%. At the best level of the day in the early going, the S&P was up by 4%. We've got NASDAQ now down 92, drop there of 0.6%. The 10-year 4.24%, the 2-year 3.72%. Spot gold up $7 the ounce, up 0.2%. $29.90, still below 3,000. West Texas Intermediate crude trading with a 59 handle now, 59.32, down 2.3%, and Bitcoin down 1.8%, 77,530 on Bitcoin. President Trump going to be signing an executive order to expand coal mining and use in the U.S., aiming to power energy-hungry data centers and revive the fossil fuel industry. The Range Global Coal Index ETF trading higher by 4.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. You're up to date on the markets. Carol Master, Tim Stanovic, live here at Bloomberg headquarters on Bloomberg Business Week Daily. Well, we mentioned Elon Musk calling President Trump's counselor on tariffs, Peter Navarro, a moron. You have U.S. Treasury Secretary Scott Bessent saying there is potential for advantageous trade deals with major U.S. trading partners as foreign nationals appeal to Washington. You've got China vowing to fight to the end on tariffs as it props up its markets. And then we have, what was that market? What was it, 104% tariff from the U.S. on China? It feels like, if it sounds like a trade war, walks like a trade war.
Does it quack like a trade war?
It sounds like, it does feel like it's quacking like a trade war.
I think we can go ahead and call it a trade war. Let's see what Bloomberg Intelligence Senior Policy Analyst Nathan Dean has to say about it. He joins us from our Washington, D.C. bureau. Before we get into what exactly is happening in the White House, Nathan Dean, I'm sure you are getting a lot of questions from clients about this tit for tat. Can we call it a trade war at this point?
You know, I think so. If these tariffs go into fruition tonight at midnight, I think obviously you can, because, you know, we're talking about 104% tariff on China. And, you know, you had Gina Martin Adams on earlier, going from our current, you know, tariff around 5%. That's, you know, pretty substantial and something that we haven't seen in the last, you know, 20, 30, 40, 100 years. So I think obviously we can't say it's a trade war. But the big question that we're getting from clients at the moment is, you know, is this going to go forward? We think so. And then are there going to be Republican pushbacks to that? And we saw that in today's Senate Finance Committee hearing with the trade representative, Ambassador Jamieson Greer. You know, you're starting to see little cracks of Republicans pushing back, but not enough to it's actually going to derail President Trump's agenda.
Hey, since you brought up that hearing, what was that all about?
Yeah, so this is the U.S. Trade Representative, Ambassador Jamieson Greer, who's testifying to the Senate Finance Committee today. House Ways and Means tomorrow. House Ways and Means could have a little bit more fireworks, a little bit more partisan. But really what we saw today was the Trade Representative trying to, you know, defend this strategy of long-term gain for short-term pain. And, you know, we began to see the cracks of uneasiness, specifically from Senator Tom Tillis of North Carolina. Now, look, he's running for re-election in 2 years, so I think obviously this is a little bit of trying to get some sound bites in. But, you know, he essentially said, look, and I'm paraphrasing here, whose throat do I have to choke?
I think that's exactly what he said.
Yeah, you know, it's like, whose throat do I have to choke if this doesn't work out? Now, you know, we saw legislation come out last week that tried to claw back some of the president's authority, and this was bipartisan. You know, this was from Senator Grassley of Iowa, a farm state, Senator Maria Cantwell from Washington. But, you know, I don't think that legislation is going to go anywhere, and it certainly wouldn't get anywhere close to overriding a presidential veto. So, you know, for us, we always get the question of when does President Trump change his mind? It's A, if he can make a deal, and, you know, Ambassador Greer said they were talking to 50 countries, and B, are you going to see consumer confidence really get to the point of MacBooks going up 100%, you know, that type of thing. So, you know, I think we're going to be in this situation for some time.
So if we're thinking about this being potentially some sort of deal as an end point to this, what would that deal look like? Because I think there's a lot of questions about what an off-ramp could be for tariffs such as these.
Yeah, I think from the White House perspective, it's just any deal, just to show the market that, look, we are going to be making deals. You know, there was some anticipation that when Israeli Prime Minister Benjamin Netanyahu was here, they would potentially announce a deal. President Trump was talking with the Prime Minister of Japan, was talking with South Korea today. So the idea of the White House is potentially you would show one deal, and then subsequently you'd be able to see the market reaction saying, hey, not all is going to be bad here. But then as you saw from the China perspective and the China negotiations that are taking place, it looks like there's not really a deal to be had. So, you know, again, we go back to this point where I think you're going to, from the White House strategy, you want to show that deals eventually will come down the line, and AKA there will be exemptions. But until that actually happens, you have to prepare for the worst, and that's what's going to happen.
I mean, Nathan, what's the smart analysis on this? Is this exactly what President Trump wants? He wants people to feel upended and kind of off balance. Or are you guys hearing from your sources in the White House that says, you know what, relax, everybody. Everything's going to work out. There are going to be deals. All these countries really are calling us, and they want to lower tariffs. They want to like figure this out. Like, what's the truth here? What's the reality?
Well, you have two groups in the White House. Obviously, you have like Treasury Secretary Scott Bessent essentially saying, look, we need to have an end game here. We got to give the markets an end game of what this looks like. But then I go back to today's hearing again, where the trade representative, Ambassador Greer, was saying, look, this is all about trade imbalance. And if you're not buying from China, or if you're buying from China right now and you're going to be paying the price for it, don't buy from China. Buy from the United States, buy somewhere else. And I think that's the thinking that's in the White House at the moment, is this idea of fundamentally changing the supply chain of the world order. And so I think, you know, Peter Navarro said it when he was on TV this morning, essentially saying, look, you know, we're going to be making iPhones in the United States. You know, I think that's the thinking that's driving the White House at the moment.
Yeah, well, I can't afford a $3,000 or $4,000 iPhone. I'm just going to say that. Having said that, who's in charge ultimately, especially when we're getting different things from members of the administration and it feels like different messaging? I mean, ultimately, is this what these folks are being told to do by the president? Like, kind of throw out some different things? Because ultimately, it's going to be up to the president, right, what he wants to do. But I'm just trying to understand how the messaging is managed.
Yeah, so, you know, it is up to the president. You know, he's the one that makes that final decision. But I will say that, you know, President Trump, and we saw this in his first term, and we're starting to see it again in his second term, you know, he's one of those leaders where he doesn't come out and say, look, this is what the strategy is, this is what I want to go with. He lets people essentially go out and create their own strategies, and then they come back and then they fight about it. And then ultimately he'll pick one, he'll reverse it, pick another one, then he'll come back to the original idea, you know, but then he'll make his decision, and then it's always up for negotiation. That's not good for the markets. The markets want clarity. But what we can say is that, you know, President Trump, we do believe, wants these tariffs to go forward. He doesn't feel that he's paying a political price for them at the moment, and he's certainly not getting any political pressure from Republicans that want to over-challenge his authority. And so we do think that these tariffs are going to go in, and they may go in for some time because the Senate's leaving for a 2-week recess, and they're not going to be here until the end of the month.
It does seem like this time is different. And when I talk about time, I mean the president's first term. He had the chance to do tariff policy like this. He had a chance to renegotiate NAFTA, and he did with the USMCA. But even now, he says that wasn't good enough. That was his trade deal. Is this time different because it is his second term, and he doesn't care about political consequences?
Well, I think he cares about political consequences, but I also feel that he was sort of held back in his first term and that he wanted to proceed with this. But, you know, moderate voices in the Washington establishment had said, no, Mr. President, let's pull you back and let's do it this way. Now, President Trump obviously won the election. He won it by, you know, 77 million, or he won it with 77 million votes, and he won all 7 swing states, and he consistently comes back to this idea that there's a mandate. Now, most presidents in their second terms feel that they have mandates, but they only have about 18 months to use that political capital before Congress begins to say, no, we have to focus on midterms, and then we have to focus on the next election. Right. So presidents, whether it's President Obama or President Trump, you come out hard and you say, this is what we're going to do, and you keep going.
Nathan, 30 seconds. It is about tariffs, but it's also about energy deals. It's also about defense positions, right? There's a lot of stuff that goes into these negotiations. It's not just about tariffs. Just quickly.
Absolutely. I mean, you have any sense of geopolitical order. I mean, in terms of trade imbalances, defense, energy, you know, investments in the United States. All of this coalesces at the cabinet level and then eventually goes to the White House or the president's desk.
It's only Tuesday, Lemon. All right, Nathan, thank you so much. So appreciate it. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst out there in D.C.
All right, taking a look at the markets right now. What a volatile day. We're down in the S&P 500 by a little more than 0.1%. The NASDAQ Composite down 0.4%. The Dow, though, sticking in the green, up 0.2%.
It's like a ski slope.
Rolling over.
Yeah, absolutely. All right, coming up, an update on today's trade and also some of the stocks that are moving in today's session. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are about, an hour?
In 7 minutes?
And 7 minutes away from the closing bell on Wall Street. Had to do some quick
You were
math.
doing some click, click, click.
I was just...
I saw the numbers above your head. Like it's like a beautiful mind.
You mean you saw the steam?
Yeah.
Let me help
I was
her.
told there would be no math.
Exactly.
You brought that upon yourself.
I know. Help me. Let's take a look at some stocks on the move on this Tuesday. With us is Bloomberg News equities reporter Bailey Lipschultz on today's Stock Movers. Got to say, your list looks like kind of my list that I'm going to do at the closing bell.
Except for maybe one of those.
Except for maybe one.
Yeah.
So I'm helping you out with the prep for the risers, I assume.
Next time, bring more decliners.
More decliners, okay. Especially on a day when we're like flat.
Initially, I was putting my list together this morning, and there was so much.
Everything was on the table.
Exactly.
And not so much anymore.
Okay, take it away.
One of the better performers, Broadcom, ticker AVGO, right now still holding on to a 3% gain, was up more than 10% at one point. This coming after the company announced it will authorize up to $10 billion in share repurchases. Analysts saying that sends a positive message. Again, just keeping in mind this is a $746 billion company, so pretty big company, but with a big sizable plan to buy back some stock. And it is also standing out against the semiconductors index that's down 1.2%, one of a few companies still holding on to the green.
gets beaten
You're supposed to buy low.
Exactly.
It's the downside when you're like, we're actually going to buy $10 billion at an all-time high, and then you top tick your stock, and less exciting news from there.
Get to the healthcare names, because we definitely saw as a group some movement here.
Yeah, calling out Humana up right now more than 10%, ticker HUM. We are seeing strength for United Health, CVS, a number of other companies is coming after some new rates were unveiled for Medicare Advantage and Medicare's ability to really pay and reimburse these managed care names, these insurance companies. So about double what Wall Street was looking for, double what had been penciled in. There's still some uncertainty about the path forward in terms of what the Trump administration could do to pinch some of these so-called managed care middlemen, as some skeptics put it. But still, a double-digit move, biggest rally since right after the election for the company.
I think what's interesting is it's a reminder that even in a day when, we're well off our highs, that fundamental news still moves names and groups. I feel like even when there's, volatility.
Fundamental news from Washington.
Fundamental news from Washington, yeah. But I mean, other than, tariff news.
Yeah.
That's a really good point.
Especially when we're talking about, Humana is a big company, but UNH at one point up more than 8%. It's $500 billion. So we're not talking about a mid-cap company by any means.
Exactly.
There's a name on your list that we don't talk about each and every day. RPM International.
Really ever? I don't know how often you guys talk about sealants and chemicals.
I actually had to look this one up. I didn't know what it meant.
It's actually a decent market cap size.
$12.6 billion company. They do various specialty chemical product lines. Why is it on your radar today?
Yeah, they're down right now, 8.3%, the biggest decline since January 2023. So that's some real size and scope. Also trading at the lowest level since November 2023. They had earnings that were worse than expected. They also forecast flat sales for the quarter ahead. The thing that stood out to me, though, looking through some of the analyst notes, KeyBank basically saying that the results, again, backwards looking, left him with the impression that demand growth had softened in recent months. So that's before tariffs could be impacting not only the company's costs, which the CEO talked about how tariff situation could increase their costs from low single digits to mid single digits because of their unknown nature as it relates to raw materials, but also the fact that if people are cutting back spending and cutting back improving their houses, that does impact their end market.
It makes me go to the supply chain function on the Bloomberg and look at what are their biggest customers: Home Depot, Lowe's, Ace Hardware, Walmart, Amazon, True Value. Yeah, right? So or contractors and so on and so forth.
Can we look at it as a test of some sort of canary in a coal mine or bellwether?
Well, maybe they did say that they saw weakness because it was unseasonably cold in the south and also the wildfires out in California. So they called out those kind of exogenous events. But we are seeing Albemarle, which is the worst performer in the S&P 500, appear down 11%. So they're trading at their lowest level since March 2020. So we are seeing broader ramifications for an industry, again, that is heavily skewed towards supply chains that would be impacted by tariffs, and also just the fact that if your base goods cost more, that goes up the supply chain, and that ends up being something that Home Depot and consumers end up facing.
And I think it's interesting that this was happening before the tariff news, right? So that there was some negative sentiment, which we were starting to see in some of the numbers that were out there. Great stuff as always. Bailey, thank you. Bloomberg News equities reporter Bailey Lipschultz on today's Stock Movers. For more conversations like the one we just had with Bailey, be sure to check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. All right, folks, we are getting ready to wrap up here on Bloomberg Business Week Daily, and we're pretty much, Tim, at our lows of the session.
Yeah, we're down on the S&P 500, 0.5 percentage point on the NASDAQ, down 0.9%. The Dow is just flat right now, still in the green. But Carol, this is quite a move in today's equity trade.
Yeah, we'll see what happens in that last hour of trading. For those of you watching on television, the close is coming your way in just a moment. Tim and I continuing on Business Week on Bloomberg Radio, and we're going to get into this 100-year tariff risk and what it means maybe for the possibility of stagflation here in the United States. Everybody, this would affect you.
Also, the CEO of North America's largest auto parts company, Magna, is joining us on tariffs, global supply chains, and more.
All right, that's going to do it for this hour of Business Week. We continue on radio, and the close coming your way right now on Bloomberg Television.
News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The president's been busy working the phones. The White House says nearly 70 countries have reached out to begin tariff negotiations. Press Secretary Caroline Leavitt today.
Countries are falling over themselves to reform their unfair trade practices and free open their markets to our country. Why? Because these countries greatly respect President Trump and the sheer power of the American market.
China is not one of them, apparently. Correspondent Anna Coren in Beijing.
China's Commerce Ministry today described U.S. actions as bullying and blackmail and said the country will resolutely take countermeasures to safeguard its own rights and interests.
Two close allies of the president are at odds over the tariffs, and it's getting ugly, as Matt Piper reports.
Elon Musk ripped into the president's top trade advisor, calling Peter Navarro a moron and dumber than a sack of bricks. The spat on X came after Navarro on CNBC that the Tesla boss was not a car manufacturer but a car assembler who gets cheap parts for Teslas from abroad. White House Press Secretary Caroline Leavitt.
Look, these are obviously two individuals who have very different views on trade and on tariffs. Boys will be boys.
Matt Piper, CBS News.
The Supreme Court today blocked an order requiring the Trump administration to return thousands of fired federal workers to their jobs. The order will keep them on paid leave for now, but legal analyst Laurie Levinson tells us it's not over.
Eventually, the Supreme Court's going to have to sort out whether the administration had the power to come in and do these wholesale firings of federal employees.
The heavy rains have let up in Kentucky, and some rivers have crested, but there's a huge cleanup ahead, and officials are urging people to stay out of the debris-filled water for now. Nicole Valdez is in Frankfurt.
So much of this community literally underwater. Business owners are just now trying to wade through that water to get inside, assess the damage, see if there's anything even salvageable, and figure out their next steps from there.
A parent company of Instagram has some new safety measures. Michael Wallace has that story.
Beginning today, the default Instagram settings for children under 16 block them from live streaming or looking at nudity in direct messages. Only their parents can turn off those restrictions. Meta is also adding its existing Instagram restrictions to teen accounts on Facebook and Messenger.
In the Dominican Republic, the death toll has climbed to 44 after the roof of a nightclub collapsed early this morning. It happened during a concert. Between 500 and 1,000 people were inside the club at the time. On Wall Street at this hour, the Dow Jones Industrials are off 30 points. This is CBS News. If you sometimes find it hard to concentrate, that's not always a bad thing, according to a new study. Here's correspondent Michael George.
Letting your mind wander can actually be a good thing. A study by the Society for Neuroscience found when people performed simple tasks, letting their mind wander didn't hurt their performance. In some cases, they actually performed better. But researchers say more complex tasks require a more focused mind.
The National Park Service has reversed edits and restored content to its webpage about Harriet Tubman and the Underground Railroad. The edits had sparked a public backlash. A National Park Service spokeswoman now says changes were made without approval and that the agency celebrates Tubman. The changes included removing her picture from the top of the page and removing references to slavery. It happened as President Trump pressed his campaign against diversity programs within the federal government. I'm Cammie McCormick, CBS News.
This
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. We're across multiple platforms here on Bloomberg Business Week Daily, and we are looking at a market that's taking another leg down. We're pretty much at our worst levels of the session, so we're looking, Tim, at stocks down about almost 0.9% now on the S&P 500. They were flat just a moment ago. Dow Jones Industrial Average down about 0.25 percentage point. NASDAQ 100, more than a 1% decline, almost 200 points to the downside.
Yeah, on a points basis, looking at what's dragging the major indices down. Apple, after earlier in this session, moving as high as close to 5%, Carol, it's down 4.3%. That four-day route continuing. Amazon down 1.9%. Tesla down 3.2%. Meta Platforms down about 0.8%.
Yeah, what looked like an earlier rally has definitely run out of steam.
Your
here.
healthcare groups are still high. The healthcare group is still higher.
Yeah, I gotta go check my gainers.
United Health, CVS, Humana, higher.
I gotta check them. Hey, coming up though over the next couple of hours, we're gonna get into the 100-year high for tariffs. U.S. tariffs. You know, we've been talking about them for the last half a week or so. Does it risk a U.S. stagflation shock? What it could mean for every one of you out there. So we're going to dig into that in just a moment.
Also, the CEO of North America's largest auto parts company, Magna, is joining us on tariffs, global supply chains, and more.
Plus, sure, bring on protectionism. What could go wrong? You might just actually end up with a much hotter, dirtier, and poorer world. So we'll get into that, a story and column by our Mark Onglo.
I knew it was going to be by Mark.
I know.
When it says hotter, dirtier, and poorer.
It's about climate.
Yeah. Okay. So we got a great program coming up over the next 2 hours. Of course, we are glued to what's happening in the markets with the S&P continuing to move lower. Let's check on the day's trade and top stories. Here he is, Charlie.
Hi, thank you very much, Tim. Indeed, 53 minutes to go until that closing bell clangs on Wall Street. We got you covered on markets. Got to stay with Bloomberg right through the close and beyond. Right now, we are looking at the lows of the day with the S&P 500 index at 5,003, a drop right now of 1.2%. The S&P down 59 points again. I underscore here lows of the session. Important because at one point we had the S&P higher by 4% today, but again the S&P now down 1.1%. Dow Industrials down 193, drop there of 0.5. Nasdaq Composite Index wiping out gains, down 1.6%. 10-year 4.23%. The 2-year 3.69% on the 2-year. Gold just about flat on the day, up $1 the ounce to $29.84. West Texas Intermediate crude now trading with a 58 handle. WTI has dropped 3%. Bitcoin down 2.5%, 76,999 on Bitcoin. Mira Pandit is global market strategist at J.P. Morgan Investment Management, and she says yes, the uncertainty over tariffs will take a toll.
If you're in wait-and-see mode, those are the three most dangerous words for the economy. Let's see how this plays out. We're not so sure, and again, that uncertainty and those scars run deep, even if some of these tariffs do come off. And that's the challenge here, because what comes off could easily come back on.
Mira Pandit of J.P. Morgan Investment Management. So again, recapping, U.S. stocks lower across the board here, down 1.2% on the S&P 500 index. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. So, Carol, we're beginning this hour with what is one of the most important trade relationships that the U.S. has, and that, of course, is with none other than China. The country pledged to retaliate against Donald Trump's latest tariff threat and mobilize state organs to send a message of resilience, raising the risk of a prolonged trade war between the world's two largest economies.
Yeah, absolutely. And we all know about the headline, a White House official saying that the U.S. is moving forward with 104% China tariffs. So there's that going on. Our own Tom Orlick of Bloomberg, writing for Business Week, and he says that this 100-year high for tariffs means Americans should brace for a toxic combination of weak growth and high prices. You know what that means. Sounds like stagflation to me. So let's get into it with Bloomberg Economics Chief Economist Tom Orlick. He's out there in our Washington, D.C. bureau. Tom, it feels like a structural change in global trade and the role of the United States in it. And increasingly, it feels like not a great economic outcome for the United States. How hard might it get for U.S. consumers, all of us?
So I think it's a challenging period ahead, Carol. I think President Trump has identified a serious structural problem for the United States, a huge trade deficit, more than $1 trillion in 2024 if you focus on the goods piece of it, and even worse, a big share of that goods deficit with China, America's biggest geopolitical rival. So Trump has identified this big problem. The question is, does he have the right solution? Jacking average US tariffs up from around 2% when he started his second presidency, all the way up to 22% if he delivers on these reciprocal tariffs today, and China, as you mentioned, potentially going all the way up to 104% tariff. There's going to be some blowback for American consumers, American businesses, and American markets.
Okay, let's maybe start with the American economy and with GDP, because there are a few, you said there's, a few consequences here. Certainly for consumers, this is a big deal. We're going to get to that. But according to Bloomberg Economics, how does this hit growth?
So it's not a straightforward exercise estimating this, Tim. When economists think about how a shock is going to impact, they tend to look at the historical data. What happened the last time we had a shock like this? The problem here is, well, we haven't seen a shock like this for 100 years. So there's just not much help looking at the recent data in estimating the impact. That said, we're making best efforts. Now, our calculations suggest US average tariff rates are going from 2% when Trump took over all the way to 22%. What we think is that that means a pretty significant blow to US GDP. The model estimate, and I underscore there's a wide band of uncertainty around this, but the model estimate is that over the next 2 to 3 years, the cost to GDP could be getting close to 3%.
One of the things I want to ask you, and we try to be fair and balanced here, is that even if the president has the right idea, the idea of reshoring and bringing manufacturing back, it's not easy to do. And even if you have all these companies promising they're going to make these investments, it's not a sure thing. It's not definitive.
Yeah, I agree entirely, Carol. I think President Trump can point to some early wins. We've had some big companies saying they're going to be making big investments in the United States. But when you probe into the details, well, those questions about the U.S. as a manufacturing center, they keep coming back. I'll give you one example. Apple talked about $500 billion invested in the United States, and they talked about creating 20,000 new jobs. Do the math on that, and it's a cool $25 million of investment per new job. Nice work if you can get it.
Yeah, I like that.
But I think it more seriously also underscores the difficulty of bringing manufacturing back when wages are high, when the infrastructure isn't really here, and when these new tariffs are going to be cutting American factories off from global supply chains.
Yeah, and it's interesting that you say that. There was a conversation a bunch of us were having actually in the makeup room with an external guest who's like, are you ready to pay $3,000-$4,000 for an iPhone? Are you ready to pay, $20 for a pair of socks? Well, some socks already cost $20. Are you ready to pay $50 for, just a regular old T-shirt? I mean, it would be a very different way of transacting and cost for consumers. Hey, you mentioned China, and I want to go there because you're right. Amid all the uproar, it's important to acknowledge that President Trump has a point when he says other countries are ripping off the U.S. China, Europe, and others put up barriers to American products that their own goods don't face in the U.S. market. Those barriers are one reason the U.S. has an enormous goods trade deficit, a record $1.2 trillion in 2024. On that, U.S. Treasury Secretary Scott Bessent on CNBC earlier weighing in on that U.S.-China trade relationship.
I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos. Traditionally, if you look at the history of the trade negotiations, we are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
U.S. Treasury Secretary Scott Bessent on CNBC earlier today. I mean, Tom, is there something to that we've got a $1.2 trillion trade deficit with China, that there is something to it being a much more level playing field here between the U.S. and China?
So I think absolutely President Trump has a point when he makes the case that U.S. companies do not face a level playing field when they operate overseas. Let's think about China. Even ignoring the tariffs, there are some very clear barriers to market entry in significant parts of China's economy. Think about the giant U.S. tech companies. Do they have a toehold in China's economy? Can you Google in China? Can you Facebook in China? Can you Uber in China? Can American banks operate on a level playing field with China's giant state-owned banks? Absolutely not. So the underlying idea that there are some issues to be addressed, I think President Trump has a point there. The question is 104% tariffs the right way of addressing it? Would there be really significant blowback for U.S. consumers paying more for everything they buy at Walmart, everything they buy at Target, a bunch of the stuff they buy on Amazon, and blowback for U.S. corporates? Would the supply chains of companies like Apple, which manufacture the iPhone in China, how would they deal with 104% tariff as they ship those iPhones to consumers in the United States? Well, I'm not an Apple corporate analyst, but I don't think you need to be an Apple corporate analyst to know that 104% tariffs would cause some serious challenges.
We have 30 seconds left, Tom. Is there an alternative to retaliatory tariffs such as these, or tariffs that the U.S. is threatening on China that would alleviate the trade deficit or attack it a little bit?
So I think there's two groups of countries in the world, Tim. You've got your big dogs, China, the European Union. They're going to go toe-to-toe. They're going to retaliate.
Right.
For smaller economies, can they enter a fight with the United States? Would that be productive? Probably not. That's why the phone from South Korea, from other countries, is starting to ring in the White House.
All right, so good. Glad we could check in with you. Tom Orlick, Bloomberg Economics chief economist. When we come back on Bloomberg Business Week Daily, what one auto parts manufacturer has to say about tariffs and his company's outlook. That story when we come back on the other side.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Equities are just about at the low of the day. 39 minutes to go ahead of the close. The Dow, the S&P, NASDAQ very much in the red. Right now, looking at a 1.6% drop on the S&P, down 80 points, now at 49.81. In the year-to-date column, yes, here we are in early April. We have got the S&P down by 15.36% year-to-date. Today, equities erased what was earlier the largest rally since 2022. The S&P lower after China's premier said his country has ample policy tools to fully offset any negative external shocks. So again, the S&P giving up a 4% gain, now down by 1.6%. The 10-year 4.23% with the 2-year 3.69%. Gold down 0.1%, 29.79 the ounce, and West Texas Intermediate crude down 3.5%, 58.55 for a barrel of WTI. As for tariffs and the market backdrop, as well as the earlier rebound, Karen Pai is head of portfolio manager at Fiduciary Trust International.
This market sell-off and the conditions here are pretty much self-inflicted, right? So we have seen the markets correct and sell off to the point that's very similar to what happened during COVID. But what happened during COVID was clearly an unknown. There was a health crisis. And, you know, whereas today, some of these policies and the tariffs that are imposed can be quickly reversed if someone chooses to do so.
Karen Pai of Fiduciary Trust. Microsoft has dismissed 2 employees who disrupted an event celebrating the company's 50th anniversary. Both employees worked as software engineers and are affiliated with No Azure for Apartheid, a group that has protested Microsoft sales to the Israeli military over the country's conduct in its war in Gaza. Microsoft shares now lower, part of a broader tech sell-off, down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And just to rehash, we do have the S&P 500 below 5,000 right now at 4,986, down about 77 points. So the S&P down about 1.5%. So just bouncing off our lows.
How high was it earlier in the session? More than 4%?
I mean, we've had such a big swing.
Yeah.
We were up 4% at one point, above 5,200. At its lows, down about 2%. But right now, again, down below 5,000.
Yeah, that Russell 2000 down 2.9% too. So the small caps are getting hit hard. Hey, it is time for another edition of Bloomberg Plugged In. It's your weekly look at EVs, and we are watching the auto sector closely. Given that a 25% tariff on U.S. auto imports took effect last Thursday, well, a levy on parts is slated to begin no later than May 3rd. The measures are expected to dramatically increase costs and upend supply chains. So let's talk to one of those suppliers who's smack dab in the middle of all of this. Magna International is a Canadian-based auto parts and auto tech company. They create components. So think car electronics, drivetrains, vision systems, powertrain systems, and more for some of the biggest car companies in the world: GM, Ford, Stellantis, and more. The company has more than 170,000 employees across 28 countries. And by sales, it's the biggest automotive supplier in North America. They've got a market cap of close to $9 billion. Though its stock is down about 25% so far this year. Swami Kotagiri is CEO of Magna International. He joins us this afternoon from Troy, Michigan. Swami, thanks for joining us. I know you have been extremely busy, so we certainly appreciate it. How are you and the auto manufacturers that you work with managing these tariff costs?
Hi, Tim. Good afternoon. Thanks for having me. And you know, we are really focused on control the controllable, and things seem to be changing on an everyday basis. So open the playbooks that we have had during the rotating UAW strikes or COVID or 2008 financial crisis or the chip crisis, and you put them all together. I think that's what we seem to be having right now.
What a way to put that. The financial crisis saw some car companies declare bankruptcy.
Right, exactly. You're saying it's as bad as that, and then some.
Yeah, I think the important part, Carol, here is, look, part of it is looking at tariffs of importing vehicles cross-border. Okay, the OEMs are the importer of the record. We as suppliers, you know, have to still look at any intercompany parts going across the border, and you have to look at the tier N supply chain. But all in all, even if we look at what we can do internally, all of this is going to lead, I believe, to demand destruction, at least in the short term, which is why I compared it, to what happened during the 2008 and 2009, where the volumes went down drastically, right? And that is the reason for my comparison to that.
As Tim mentioned in the introduction, your top customers, GM, Mercedes, Ford, BMW, VW, Stellantis, Nissan. Are you already seeing, tell me kind of what the environment was going into the tariffs, and then how it's changed in terms of demand from your customers now that the tariffs are here.
Carol, one of the important things in the automotive industry is certainty is stability. And what we have today is the complete uncertainty, right? It's difficult to plan in an industry such as ours, on an everyday basis, right? And that's what we're trying to deal with today. You might have seen some of the announcements that have come starting April 14th, some of them starting, last Monday already. BMW from the Spartanburg facility, or General Motors from Fort Wayne, Stellantis in Toluca, Warren Truck, Windsor, halted productions or changing production schedules and so on and so forth. So that's the effect we are starting to see. And obviously, it's an industry that you can't flip the switch to change things overnight. If there is a policy roadmap towards whatever the outcome might be, I think that's addressable. But today the struggle seems to be addressing what's coming at us on a daily or hourly basis.
So who absorbs the cost here? What do your shareholders need to know about where customers will see price increases, where you will see a hit to margins, where the end user, right? Us, people who go and buy these cars, will see price increases. Where do the chips fall?
Yeah, it's kind of all of the above, Tim, right? Because, from a supply base as well as the automotive OEMs perspective, everybody look at whatever that can be done. I think that is given. But given the industry and the type of margins that are there, that's out there, everybody knows that. Nobody can handle the, magnitude of the impact that we're talking about here. So I believe it has to, some way, shape, or form, pass on to the consumer. And if you look at where the car prices are today in the market, they're already, stretched quite a bit, right? So that's why I talk about demand destruction and the consumers ultimately facing, if not all of it, a significant part of the impact of the tariffs.
You said it's like the playbooks from the financial crisis, COVID, the UAW strikes, all combined. But I'm wondering if, as a result of this, you are making any big changes to how you do business, where these parts are manufactured. Do you plan, as a result of these tariffs, to do more in the United States?
It's too soon to say that, right? Like I said, we are investing, or not we as an industry, if we are doing investments today, it is typically for starting production in 27 or 28. So we're talking at least 2 years out, right? So when we start talking about what needs to be done, should we react to what's happening today? And where the policy ends up is going to be ultimately what everybody's looking at. So from a near-term perspective, cash conservation and hesitancy or tentativeness to say where will it end up. So if there is a dollar that I can push out from a perspective of investing today versus a month or 2 months from now, I'll pick the later, right? Because I want to have certainty in where we are, ultimately going to invest and get the returns.
I'm sorry, please finish.
No problem. I think going back, everybody is now focused on free cash flow conversion, capital efficiency. So there's a little bit of a wait and see approach. And, in the industry that depends on 2 or 3 year cycles, that's, difficult.
Swami, the thing I wanted to ask you, and I keep going back to this interview that Sonali Basak of Bloomberg did with Boaz Weinstein, and he said, even if we get a change and perhaps the White House, the president comes out and says, forget it, delay of 90 days, or you know what, let's call it off. The problem is that the president's going to be in the White House for the next 4 years, and that what he said is the uncertainty genie is out of the bottle. I can't kind of get away from this. That would you feel if the president came out and said, oh, changed my mind, would you feel confident enough to move forward? Or would you feel like you were constantly a little bit off balance, not sure if something might change from the White House?
I think the industry as a whole is going to be a little bit more conservative and think twice. We have always believed, you have to produce locally, whether it's a local for local, and we have always looked at the entire North American market as one market. So that is being questioned right now. So we have to work very closely with the OEMs, not just I think the whole ecosystem has to be pretty much aligned as you think of investments going forward. Which segment is going to be consumed where do you put the footprint? So in short, Carol, I think there is going to be a little bit more thought before new investment goes into address, especially where parts or vehicles are going cross-border.
Right. So then when we think about the U.S. economy or global economy, there are investments that will not happen. And there will be, as we talked, was it a little bit of a demand destruction? Like there'll be some destruction that economic impact we don't get back, right, because of that conservative mode.
Yeah, I think it's fair to say there is going to be tentativeness in the investment cycle now until people get a little bit more clarity. That's one thing. And the second thing is short term, I think there is going to be, reduction in volumes.
I mentioned you have 170,000 employees in countries throughout the world. Stock down about 25% so far this year. You're going to take a hit ostensibly as a result of these. Are you going to have to start making decisions about who keeps their job and who doesn't keep their job?
And Tim, yes. That's the reason why I compared it to what happened during the COVID or the UAW rotating strikes, right? You have to constantly react to how the OEMs are planning their production schedules, whether it's lines coming down, complete, factories, assemblies that are stopping, which means we have to react accordingly. So obviously there's going to be that impact, but we have to, as one of our guiding principles is a long-term strategy to look at our business as a long-term owner. So whatever decision we make, we have to look in terms of today, but making sure that it doesn't hurt us in the long term. So that's a little bit more challenging today than it was a few months ago.
One of the things I want to ask, are you afraid, and do you feel like the C-suite's afraid to really speak out against the Trump administration? You're actually being pretty frank here. CEOs in some surveys are calling this the Trump recession. CNBC did a CEO survey. Yet it seems like most don't want their names attached to the criticism of the administration. Is the corporate community afraid to speak out?
Carol, from our side, look, I think Tim mentioned in the introduction, we are in 28 different countries over the last year and a half. 19 of the countries that we are present in had elections, right? So policy is something we deal with all the time. This is obviously a little bit more disruptive than what we have seen elsewhere or seen in my career here. But we have to look at the industry long-term, right? Our design cycles are 4 to 5 years, and maybe with the changing industry, it's dropped down to 2 or 3 years, but you got to take a long-term approach. So yes, it's disruptive today, but we have dealt with this in the past, and we just, have to keep our head down and hope we look at a policy roadmap rather than react to something that's happening today.
One of the things I do want to ask then, and kind of on that in terms of long-term strategy, what does the auto supply chain look like if the Trump tariffs are here to stay? How long does it take to realign a point that will mitigate tariff costs?
I don't know its mitigation. That is definitely going to lead to rationalization of the footprint, right? We have to start looking at balancing capacity. Luckily we have footprint in Mexico, US, and Canada. So again, like I said, it's not going to happen over time, depending on complexity of the part in the system. It could be anywhere from months to years. There are some complex systems where, just to give you an idea, some of our plants are 1 million square feet facilities, right? With about 300-400 million in invested capital. So those kind of plants are not easy to transfer overnight. Those will take years, and it's not just a unilateral decision either, right? This has to be done in conjunction with the product cycle planning of the OEM, Where is the assembly plant, and how are we going to work with them? So there's a lot of complexity involved here. Some of the more complex footprint rationalization might take years to crystallize.
You know, as we're talking, we're seeing stocks continue to fall. We're now down more than 2.2% on the S&P 500. The NASDAQ composite down 2.8% as we speak. Your company shares down 3.1% right now. How do you watch not your company's stock specifically, but the broader sell-off in the context of consumer demand, the wealth effect, and just concerns to growth?
Yeah, I think that's, like I said, that's the demand destruction part, right? What happens to the industry, interest rates, what happens to the overall economy, the buying power of the consumer, especially with a lot of fear that might come based on what's happening around you, which all means people's ability to buy cars and at what price point. If that's impacted, the whole industry is impacted. And that is the big concern that we all have, right?
Well, you know, we talked a little bit about whether you'd move facilities. You said it's too early to say. We are already starting to see automakers reshoring assembly plants or make announcements. Hyundai was one of the ones we saw from the White House just in the last month. If we see more automakers reshore assembly in the U.S., will you need to move facilities back to the U.S. as well?
We have a footprint in the U.S., but to your point, Tim, yes, I think look as a supply base, we look at the material availability of the entire supply chain, where it's coming from. We have to look at the logistics. We have to be as close, as possible to the assembly based on the type of the part and the complexity of the part. So considering all of that stuff, if there is a significant reshoring, yeah, we have to look at, rationalizing the footprint differently.
Hey, Swami, just to kind of wrap up here, you kicked off, and both Tim and I were like a wait, what moment when you said that you're thinking about this environment akin to, I think you said the GFC, COVID, and union strikes all together. That's today's environment. So is a recession here in the United States given? Is maybe perhaps a global recession given? A given, I should say.
Yeah, I think, again, hopefully, everybody comes to the table and has the discussion to avoid that. But all indications seem to be, heading in that direction, that the economy is taking a hit. But like I said, this is happening so fast and so quick. Part of it is, who comes to the table at what time, and, how much can you recover and how fast can you recover? But that's definitely on the cards based on the facts today.
Well, we really appreciate your honesty and giving us an assessment of your world that really plays into all of the major auto manufacturers. Swami, thank you so much. Swami Kotagiri, he's Chief Executive Officer of Magna International, joining us right here on Bloomberg Business Week Daily.
Charlie Pell is not too far from me in terms of number of feet.
Did you hear a gasp?
I heard a gasp. And I think it was because he saw what the NASDAQ was doing, down more than 3%. Is that right, Charlie?
Absolutely right. I looked at that and thought we might see some signs of stabilization. We got 20 minutes to go, but we are moving lower right now. S&P 500 index is now declining by 2.59%, and that gasp was in the year-to-date column, looking at the S&P down by 16.1%. Bottom line here today, we saw a 6% swing from high to low on the S&P 500 index, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Sean. That's right. Terrible tape action today amid that reversal in the main U.S. averages. Dow's currently down 623 points, was up 1,500 points. S&Ps are down 2.3%, and NASDAQ is off by 2.9%. The U.S. 10-year yield is at 4.23. Gold and oil are sinking, and Bitcoin, that's lower by 2.7%. Among the main 11 S&P sectors, all were trading in the red, led by losses in materials and energy. And leaders to the upside in the Dow, only UNH, while Apple fell 5% and led to the downside. In the tech space, Democrats are probing Google and Microsoft over their AI partnerships, and Micron said they're imposing a tariff-related charge in the U.S. starting April 9th. Wrapping things up, Intel fell as much as 7.6% to its lowest level since 2010. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill Maloney. Keep it locked into Bloomberg Radio right through the closing bell. And, of course, check in with Bloomberg Radio tonight to find out how Asian markets are reacting. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We got about 18 minutes to go until we wrap up the trade on this Tuesday. And as you just heard from Charlie and Bill Maloney, we're pretty much hovering near our worst levels of the session. We've seen in the last hour really another leg down for U.S. equities, kind of a straight ski slope down today. We got off with a strong rally, and it looked like it was going to be a bit of a different day, but we've seen just destruction. Demand destruction since then, and we've got the S&P down about 2.4%, Dow down about 1.7%, NASDAQ 100 2.7% to the downside. And what I mean is just you're seeing obviously a lot more selling coming into the market.
Yeah, I mean, the reversal that we saw from earlier in the session, I thought this was a significant bounce that we saw, Carol.
Yeah.
No, we saw in the middle of the session, kind of stocks search for direction a little bit, but the direction right now is very clear.
What's wild is I remember earlier in the day looking for some stocks, the outperformers, and almost every name in the S&P 500 was higher today. Yeah. I'm looking at it now. You've got 474 names to the downside in the S&P 500, 29 gainers. That's it.
Probably those healthcare names that are on your radar.
Yeah, still later. Holding on to some support there.
Hey, curious what Mark Steffen has to say about this. He's global alternative investment strategist with the Wells Fargo Investment Institute. He joins us from Minneapolis this afternoon. Look, I know your focus is on alternatives. We're going to get to alternatives in just a minute, but that doesn't live in a vacuum. You got to look at the equity trade on a day like today. After a 4-day period like we've seen, Mark, what does it do for your alternatives?
Yeah, I mean, it just highlights the uncertainty that's out there right now. And obviously, investors were caught off guard by the size of the tariffs, which kind of precipitated the declining market that we're seeing here over the last week or so. And, that uncertainty continues today. We saw a little rebound where we thought things were oversold here midday, and a rebound was in order, but as you can tell, the markets are headed back down, and so uncertainty just continues. But despite just the volatility that we see in markets today, we're telling clients and investors to just remain disciplined, remain patient, try to rebalance to their target allocations during these periods of times. Ensure that, they're adequately diversified across different asset classes and just to kind of remain focused on the long term.
All right. What's diversification? Cash, bonds, or buying a case of wine and just go sitting in a corner? I mean,
hey, wine is an alternative investment, Carol.
I know. So, Mark, I mean, seriously, I mean, in an environment, and I don't want to be like crazy because we've seen sell-offs, we've seen disorderly sell-offs, but this is a day where we saw a rally and it ran out of steam and it's picked up momentum as we're going into the close. And it does look like everybody's focused on the White House. Having said that, there's a lot of talk about stagflation or recession. We just talked with the CEO of Magna International that plays into the auto sector. All the big automakers buy from them. And it was pretty negative. All of this could change on a dime if we get something different from the White House. Having said that, there's nervousness in the market. So what does diversification mean in this environment? If you haven't already done the diversification moves, what do you do?
Yeah, it's a good question. And I mean, our base case is that, although our outlook is definitely tempered by some of the recent tariffs that we saw, we still think that we're going to end the year in positive territory. Economic growth, our forecast is about 1% on the year. So we do think later in the year we'll see some growth there. But yeah, it can be difficult to maintain discipline, avoid some of the behavioral traps during volatile markets like this. But we are advising clients, on the equity side, focus on quality, strong balance sheets, reliable earnings, and fixed income.
But Mark, what if tariffs stay? If tariffs stay, then what? Is it really we have to reprice everything?
I mean, that's not our base case. Our base case is that we think there will be a lot of countries coming to the negotiating table over time. We've already seen some foreign leaders come to the table to potentially get in line to negotiate. So we think it's going to be a declining impact over time. The largest impact, obviously is going to be up front here over the next several weeks to months. But we do think kind of mid-summer timeframe that the impacts of tariffs will dissipate. There may be some holdouts. There may be some, countries that continue to kind of hold steady to the fight and, maintain, the current situation. We don't think that's the base case. If that does happen, tariffs are around longer than, everybody expects at this point. Obviously, several different assumptions need to be revised at that point.
I do want to note I'm watching the S&P 500, and right now we're at a level, Carol, that we haven't seen since February of 2024. So we're at our worst level in more than a year on the S&P 500, and we are inching very, very close to a bear market. The official definition, or official in quotes, but we're down 19.95% on the S&P 500 from those February 19th highs. So really close to that 20% threshold.
Yeah. And it'll be interesting to see if we actually touch it, hit it, and then do we bounce off, right? Investors watch different levels. I am curious, Mark, have you been buying for clients? Like, what have you been doing, since the tariff announcements and the sell-off in equities? We know you like alt investments, but I'm just curious, what have you been doing, or have you just been kind of waiting this out, riding it out?
Sure. Yeah, I mean, like I mentioned before, it's maintaining that discipline, rebalancing to their targets. But, if you do have cash, we are advising clients to opportunistically look at putting some of that to work. And maybe it's dollar cost averaging into the market. We like sectors like information technology, communication services, financials, energy. We do favor large caps over small caps. Actually, commodities is another trade that we do think will be a good hedge against long-term inflation as well. So on the alt side, there it's a different story. We do favor strategies like equity hedge or long-short equity that offer both upside participation as well as some downside hedging or protection in some of these markets or the volatility that we've seen as of late. Same thing on the long-short credit side. Enables you to participate in that improving economic environment or credit environment, is at the same time protect against some of the downdrafts that we've seen here as of late. And then countercyclically, one of the other strategies we like is distressed credit. We think the opportunity set within this space is going to continue to expand. We've seen, an increase.
Will it become more distressed? Oh, wait. Did we just hit it?
I think there is.
Yeah, we just hit it.
Hang on. We just hit down 10%, right, on the S&P?
20% on the S&P 500
from
since
the
February 19th. Yeah,
so
intraday. So
touching on a bear market there.
We'll see how things close out the day. Mark, I do. Carol, you had a question for Mark.
No, you were talking about distressed credit. And in an environment, if we get into a recession, does that distressed credit become even more distressed? And do private credit investors have to think about going to their companies and renegotiating the terms so that you don't have a wave of bankruptcies and so that those investments don't just go to zero?
Yeah, no, absolutely. I mean, I think we've seen some of that already, to be honest. While the traditional default rates remain in check, we've seen the use of what's called distressed exchanges, where companies are sort of preempting the bankruptcy process and restructuring their debt, whether it be reducing the overall debt load or restructuring the terms of the debt. And that's been ticking up, over the course of the last several months or quarters, actually. So, we've also seen increased use of what's called like PIK loans or payment in kind loans, where companies are saving cash by instead of paying their interest in cash, they're actually adding to the principal value of their loan. So these are signs that stress is increasing in a certain segment, but we do think at this point it's limited. There is a lower quality segment that has been more impacted by just the higher rates that we've seen over the last couple of years. So that segment, unfortunately, will continue to probably see rising stress levels. And like I said, the opportunity set within the distressed credit space, we think is going to continue to grow, through the course of this year and likely into the early stages of a recovery period.
Does hitting a bear market, though, on the S&P change things for you?
No, I don't think it does. Like I said, we want to continue to maintain that long-term focus. Like I said, recession, although we may get a technical recession, is still in the cards potentially, but our base case is a recession is still off the table at this point. And so we still think we're going to have growth through the remainder of the back half of this year, and like I said, and have an improving economy into 2026. So,
listen, that's music, I think, to a lot of people's ears, but what changes your view on that?
Say that again?
That would be music to a lot of people's ears if you see an improving economy in the second half of this year, but what would change your view on that?
Yeah, I mean, obviously, like we talked about it, the length of the tariffs and potential impact. A lot of people are sorting out the potential impacts right now. Are these negotiating tools used by the administration to get better terms, reduce trade deficits, et cetera? But how long do they last? How many countries come to the negotiating table? Obviously, that's going to have a huge impact on where we go from here.
I think the big question that a lot of people have is, I don't know, asset allocation. You think about alternatives in a portfolio. Is a bear market, Mark, the time to increase exposure to alternatives? Don't people get very scared during times like this?
Yeah, absolutely. I mean, people do get scared. And I think, like I've said, that discipline, avoiding some of the behavioral traps of, selling out when fear is high and, you want to be greedy during these times and have the focus to kind of rebalance into some of the areas that have.
So should people be, look, I know you're focused on alternatives, but should people, you said be greedy at this point, should people be buying the dip?
Yeah, I mean, like I said, in those select areas, focusing on high quality, strong balance sheets, reliable earnings, we do think if you do have cash to put to work or just rebalancing your portfolios in order, we do think, that's a good practice to be in to kind of, allocate across the cycle into some of these areas that have been depressed here over recent periods. So absolutely, we do think long term we're still going to be okay. It's just obviously difficult to see when you're in the throes of the volatility cycle that we've been in here as of late. But we do think we'll get through it. We think. Like I said, long term, we're still going to be okay. It's just a matter of kind of weathering the storm, so to speak.
Hey, just a reminder to everybody who's listening, we've got just under 6 minutes to go until we wrap up this trading day on this Tuesday. We've been talking with Mark Steffen, Global Alternative Investment Strategist with the Wells Fargo Investment Institute. Having said that, we're looking at the S&P 500 officially touching upon a bear market, so down 20% from its highs back in mid-February. Right now, it's bounced off of that, but still down about 1.8%, a decline of 87 points at 49.76. Dow Jones Industrial Average, 2 bouncing off its lows of the session, but still down 1.1%. The NASDAQ 100 down about 2%, 367 points to the downside, now down 2%. So we're bouncing around a lot. Russell 2000 is down 3.3% in today's session, and we've certainly seen that index. It is down about almost 30% from its high back in late November of 2024. And again, we've got the VIX. It's also moved up. We're looking at a VIX of about 55. We've been as high as 57 today. So again, and you're seeing almost nearly all the names in the S&P 500 trending lower, Tim.
We're also keeping an eye on what's happening at the White House because the president is expected to participate in an event that they're calling the Unleashing American Energy Executive Order signing event. It was scheduled for 3 o'clock. If the president does start speaking on tariffs on the economy, we'll certainly play those comments for you.
Absolutely. Investors watching very closely. Hey, Mark, just to get final thoughts from you in this environment, what will make you a little bit more worried? Is it, again, just if these tariffs stand put and you don't see some kind of reversal? What is it? Oh, we lost him. Okay. Mark Steffen, Global Alternative Investment Strategist with the Wells Fargo Investment Institute, joining us from Minneapolis, Minnesota. All right, folks, we've just got about 4.5 minutes to go until we wrap up this trading day. And as we've been mentioning, we have seen the selling among U.S. equities really deepen over the last hour or so, but we are bouncing off our lows of this session, just a little bit of a blip off, I should say. Down about 1.8% on the S&P 500. The NASDAQ 100 still down about 2.2%. But as you just as it happened, Tim, pointed when the S&P 500 touched upon a bear market earlier in the session. I don't know that we're going to close there.
Look, I'm not going to pretend I'm a technician. I have no technical training here. I'd be interested to ask Gina Martin Adams what she thought of this, because she has a technical and a fundamental background. Yeah. What does it mean if we bounce off in intraday of the bear market?
Yeah.
What does that mean? Like, is that a good sign? Bill Maloney was in here talking about how this was a bad take.
Markets do this. Investors do this, right? We get there, and then, you know, whether or not we see another leg down as we, in this final few minutes of trading, or what does tomorrow bring? I mean, Gina did say that any kind of reversal from the president in terms of tariffs has to be very clearly communicated, and there needs to be an understanding that that's it, not that it could change again in a day or a week.
I'm looking at the HCPI function on the Bloomberg terminal to remind me of how high we were on the S&P 500 earlier in the session, more than 4%.
Yep.
Up more than 200 points at the best levels of the day, down 3% at the worst levels of the day.
Yeah, folks, you're talking about like a 7% swing that we saw on the S&P 500 at its highs, up about 4% today, at its lows down about 3%. 7% swing on the S&P 500. So investors trying to make sense certainly of it all. Again, volatility seems to be the watchword. Uncertainty seems to be the watchword. We're looking at a VIX at 53.6 off its highs of the day, but not necessarily a big move to the downside. All right, folks, the close coming your way in just a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street. We do check markets all day long here at Bloomberg. Another wild one for the U.S. stock market with the Dow, the S&P, NASDAQ, all tumbling. S&P 500 at the door of a 20% drop, heading into a bear market. Right to today's numbers ahead of the closing bell, we have got the S&P 500 index down 88 right now at 49.74. That represents a drop right now of 1.7%. And in the year-to-date category, the S&P is down 15.4%. Dow Industrials at 37,604. The Dow down now by 1%, down 362 points. We've got the NASDAQ Composite Index down 354 for NASDAQ, a decline of 2.3%. Your 10-year yield, 4.26%, with a 2-year, 3.71%. Spot gold, little changed on the day, up $1 the ounce to $29.84 for the precious metal. That is a gain of just under 0.1%. Crude moving lower, down 1.6%. West Texas Intermediate crude with a 58 handle on this Tuesday afternoon ahead of the closing bell at the NYSE. We've got Bitcoin down 2.8%. Bitcoin at 76,700 even on Bitcoin. So stocks are tumbling. S&P down 2% due to back and forth trade threats between the United States and China, leaving it on the brink of a bear market. Wild swings all day long, and of course keep it locked into Bloomberg Radio this evening to find out how Asian markets react. So there it is at the New York Stock Exchange, the sound of the closing bell as we wrap up this session on this Tuesday. A down day for the Dow, the S&P, and NASDAQ. Folks from Argon Inc., AGX on the ticker there, ringing that closing bell. Recapping stocks lower. S&P right now down 1.7%. I'm Charlie Pellet. What a day. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, you are listening and watching Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Brokers studio. We do have stocks tumbling on this Tuesday. Really some wild swings once again, lashing Wall Street for a fourth straight session. Some back and forth trade threats between the U.S. and China really knocking down stocks. Such an important trade relationship, such an important economic relationship, and that is certainly weighing on the trade, erasing an earlier rally that was the biggest since 2022. That's how we started the day. That's how it looked kind of for a little bit. And then, of course, some of that back and forth when it comes to the U.S. and China trade relationship, certainly weighing on the stocks and leaving the S&P on the brink of a bear market. We touched on it, but we did not close there.
I was looking at some of the stocks in the S&P 500 that made big moves to the downside today. Carol, Apple was the company that dragged everything lower today, down by 5%. It was up as much as close to 5% on the day today, but quite a reversal. Amazon fell by 2.6%, Nvidia fell by 1.4%, and Tesla fell by 4.9%.
Yeah, so we definitely did see like kind of across the board here, right? If you look at the S&P 500 just generally, as I said earlier in our broadcast, that look at the trade earlier today, most names in the S&P were actually higher. Well, by the end, here at 4 o'clock Wall Street time, you had 434 names in the S&P 500 losing ground, and you had about 69 holding on to their gains. Some strong rallies. We talked about the health insurers. They certainly were some outperformers. Humana up more than 10%. Those health insurance stocks rallying after the Centers for Medicare and Medicaid Services finalized a 5.06% average increase in payments to Medicare Advantage plans from 2025 to 2026, an increase from its earlier projection. So Humana, Alignment Healthcare, CVS, among your top performers. So there were some that traded on fundamental news and actually gained in today's session.
Well, I'm going to go back to Apple because worth noting some superlatives with Apple. It's down 23% just in the last 4 days, Carol.
Bear market for Apple.
Yeah, it's pretty wild to see. Over that period of time, it's lost $770 billion in market cap. It's the biggest decline in a 4-day period going back to, are you ready? October 4th, 2000.
Wow.
The dot-com
25
bust.
years, roughly. Almost.
And that's when in 4 days, Apple lost 56%.
Well, listen, you know, you talk about global supply chains, and that Apple is the epitome of a global supply chain, one that has taken decades to build. Mark Gurman, you know, constantly reminds us of that. It's very sophisticated. It's very efficient. It's taken a long time. And I thought what was interesting, one of our earlier conversations that we had with the CEO of Magna International, who plays big time into the auto supply chain, that you do want to, I think it was him or maybe it was somebody else, but it was that you do want to have set up shop and have some of your supply chain in those markets that you want to sell into. It's really important. And China is a very important, you know, part of Apple and its growth strategy. At the same time, it is a global supply chain and global market that Apple plays to. And that's why those tariffs that we're seeing imposed on China are really problematic for Apple, what has been one of the world's largest market cap companies.
Look, it's also a company that navigated successfully the president's first term when it came to tariffs. Tim Cook played it masterfully.
Yeah.
I'll never forget the pictures and video of him with President Trump in Texas showing off the manufacturing facility. And as a result, Apple was able to really get some wins during that first term when it came to the trade war with China.
Right.
This time is different.
And I think it's safe to say that there's a lot of tech CEOs. We saw them very front and center during the Trump administration, the inauguration, I should say, for the second Trump term. And I think there was maybe a feeling that, you know, their relationship, their closeness, or what seemed to be a closeness with the president, that some of these issues would not be so problematic. And I think the tariff story, many would say you shouldn't be surprised that Donald Trump has talked about tariffs from his first administration. This has been something that's been a part of his playbook. It was trickier to implement. Maybe the guardrails were there during the first administration, but they're certainly unleashed here in the second Trump White House. Having said that, there are many who say this isn't over, and we'll see what kind of negotiations, what kind of deals get made between the United States and its top trading partners, China included, and whether or not this changes, Tim.
Just looking at the 4-day period of the S&P 500 that we have experienced in recent days, it's the longest. It's the most lost in the last 4 days, going back to March 16th of 2020, so the height of the COVID pandemic, that was 17%. more than $5 trillion in market cap.
It's kind of real money, folks, and it went from 1 to 2 to 3 to 4 to 5 trillion pretty quickly. Just looking at the major industry groups in the S&P 500 today, there are 11. Your best performing group, financials, but they were still down about 0.4%. Bottom of the pack, energy was down about 2.5%. Real estate was down about 2.5%. Consumer discretionary down about 2.5%. Materials down almost 3%. All 11 of the main industry groups are down today. Let's see what Vince Signorelli makes of the trade that we've seen, not only today, but since the tariffs were imposed. Vince, of course, is Bloomberg macro strategist joining us. So, Vince, it looked like we did have a rally, and it looked like maybe it would hold, and then that was not to be the case, as it looks like trade tariffs and talk about that between the U.S. and China flared up again. Talk to us about the trade today and what was significant for you.
Well, I mean, the tariff is again, the tariffs are the word. Tariff is the trade. There was a little bit of excitement this morning when Trump was announcing potential deals with South Korea and Japan, and that Italy's Meloni was coming in a couple of weeks to discuss trade. So things were looking on the up. And then the reinforcement that China tariffs were still with us, and we're going to hit it about 104% tonight. That was confirmed, or reconfirmed, I should say. And the reality, what we heard from Trump this morning was, China wants to do a deal. They don't know how to contact us. I mean, they went to the WTO this morning complaining about tariffs. So that's hardly a country looking to do a deal with the U.S. And it's really unlikely that President Xi is going to be knocking on the White House door with hat in hand, looking to do a trade with Trump. So this is going to be extended for a while, I think. And that's
extended in what sense? Like, we know the fight's going to be extended, but the carnage that we're seeing, if you're long equities, how long is that going to be extended? What turns that around? I mean, stocks have been in free fall for the last 4 days.
Yeah, it's a really, really good question. Talking to traders today, we're definitely seeing some folks stepping in at the close, getting their toes in the water. The extension that possibly that people are talking about is 4,500 in the S&P cash. We're still about 400 away from that, but there's going to be a lot of give and take, and even if that happens, there's just a lot of talk, and I don't want to really go into this too much because it's just a lot of scuttlebutt on the street about if things continue like this, will the Trump administration look for a scapegoat? Will it be Lutnick? Will it be Navarro? And traders today are putting more bets on Navarro than Lutnick.
So what would that do to markets if Navarro got the booth? And look, again, you're saying this is scuttlebutt.
It's totally rumor, just totally a conversation on the street.
But would that actually
no fact to this whatsoever? But if Navarro would get the boot tomorrow, you'd probably see about a 2,000-point rally in the Dow, to be honest.
Well, it's so funny that you say that, because we were talking with our Max Chafkin about some of the back and forth between Elon Musk and Peter Navarro, and there's been some speculation. Again, rumor, careful, let's be smart here.
Yes,
but that
totally, yes.
But that the president, looking for an off-ramp, and I guess we just assumed it would be in deals with countries, but you do wonder if he is looking for some individual to say, listen, that was his plan, maybe it was wrong. Let's get him, let him go, and let's redo this. But again, who knows, right?
Yeah, I mean, I think what you said, the former part of that is really where it's going to come from. You're going to see deals getting done.
Okay.
And I think the administration is going to be touting more the deals getting done in the next couple of weeks, as opposed to deals not getting done, as in vis-a-vis China. And I think we're going to start to see a little bit more positive comments come out of the White House to turn this a little bit. Don't forget, we've even seen the Republicans pushing back against Trump, where they tried both in the Senate and some in the House, trying to basically impose a bill that basically says Trump has to go through the Senate and the House in order to impose tariffs. It's dead on arrival. It's not. It's not even.
Said he would veto it.
It's not going to pass. Absolutely. So it's DOA. It's not going anywhere. But just the idea that they would even consider that, and that his own party is pushing back, is definitely going to have some conversation going on in the White House. And I think it's very, very interesting that in the last 24, maybe even 48 hours, We haven't heard a peep out of Ludnick, and he's been the real bull in the china shop, if you will, in the same camp as Navarro, talking really tough on trade.
Okay, so maybe that's the case. Who we have heard a lot from is Treasury Secretary Scott Bessent. What do you make of that? He's been out each and every day.
Yeah, he's not going to go against Trump, but he is, again, in terms of what the market sees as a voice of reason. So he's more likely to put a positive spin on things than a negative spin on things. Remember, like the rumors yesterday with Hassett, where he said Trump was going to consider a 90-day pause. That headline was complete fiction, came out of a conversation on Fox, which was an elaboration on very something Hassett said that really had nothing to do with a pause. And you saw the market react like surging on that news. They're desperately looking for good news to buy into this. People do have cash. They do want to get into this, but you just don't want to step in front of the steamroller right now because it's still coming, as we saw today. Although, like, think about, like, in the last 15 minutes, the Dow was down over 800, down 320 into the close. So there's still a lot of possibility for this to turn around, but I would just be really careful. If you want to dip your toes in a little bit, it's not a bad idea.
Yeah.
But definitely don't be sticking your head through the door.
Vince, it's, I want to go back to this idea that, if we saw a head roll.
I ain't jumping in.
If you say, if you see a head roll, we could see look, we kind of saw this yesterday with this 90-day reprieve, read all about it on the terminal. Great stories from Bailey Lipschultz and more about what happened yesterday. Carol, you were out, but it was crazy.
Yeah, I know.
Okay.
It was. Believe it or not.
You paid attention?
Occasionally I was like reading in because I hate missing volatility.
I could feel your FOMO.
I was.
But Vince, if we were to see a head roll, that doesn't necessarily mean that Trump would back off this policy. He told our editor-in-chief, John Micklethwaite, before the election, tariff is his favorite word in the English language.
Yes, I remember that conversation very, very well. See, I think what people really need to understand is, and forget about the short-term view, the markets are going down, Trump's going to change his mind, this, that, and the other thing. He really, really isn't attempting to rewrite economic policy for the United States for the last 40 years.
Right.
He wants to bring us back before globalization, before the Clinton globalization years, more towards that 1988 Reagan, 1992 George Bush kind of concept, where trying to bring manufacturing back to the United States. The only way he's going to do that is to somehow undermine and cripple the manufacturing state of China. And the only way to do that is to outlast them. We can't outspend them. We have a $36 billion trillion deficit. This isn't Reagan against Russia in the 80s, where he outspent Russia and sort of won that war, if you will.
But to be fair, Vince, and this is something we talked about Tom Orlick earlier. I mean, we have a $1.2 trillion trade deficit with China. And I mean, that's real money, right? And the whole reason that American companies wanted to be in China and they set up shop there and so on and so forth is they wanted to tap into the 1 billion plus consumers of China. And it hasn't necessarily worked out as well as some might have anticipated. And so this is about, I feel like, or is it about U.S. and China, or China kind of playing more fairly in a way in terms of trade back and forth?
I think so. Realistically, if you look at globalization, the idea of globalization was we were going to float all boats. So we in the United States, for instance, and the developed countries, I shouldn't say just the United States, we were going to invest in underdeveloped countries and such. We were going to lift up their economies, and then they were going to buy our goods.
Right.
And all boats were going to float, and everyone was going to prosper. Well, that didn't happen. If you look at globalization in and of itself, it was a failed policy. What happened was the developed countries spend a lot of money into underdeveloped countries, and they didn't buy anything of ours. We just bought a lot of their cheaper stuff, and that created deficits across the developed nations, mostly, of course, in the United States, because our consumers spend more than anyone else in the world. And so what Trump is trying to do is recalibrate that. And, you can't fix it all in one day, but bring it back a little closer to the middle. where essentially we get some meeting of the ways where we get a little bit more of a balance in trade.
Yeah, maybe you can get Japan to buy more U.S. autos because we buy so many autos from Japan. That, for example. But is there a way, in your view, to actually go back in time? Because I think the ship has sailed. The genie's out of the bottle. That seems to be, like, this is not a world of 40 years ago. This is a world where, you know, we're using WhatsApp to connect with people all over the world right now on devices that are made with components that include Africa, Asia, Europe, the United States. Like, this is a different world that we live in. We're not making clothes in the U.S. that we wear.
Yeah.
Like, this is a completely different world.
Yes, and we're not going to be we're not going to be making textiles, you know, cheap textiles in the United States. I think realistically, the manufacturing he wants to bring back to the United States is a bit more high end, where he's talking about autos, for instance, chips, you know, things of that nature. We're not talking about making sweaters and socks in the United States. It's more on the high end stuff. And setting perhaps in the high end of things a more level playing field, you know, as opposed to what happens now. And you know, look, you have to think of it realistically. All of the rhetoric out there is saying tariffs are bad, tariffs are bad, tariffs are bad. Well, if they're so bad, why do so many other countries have them? To some extent, it's definitely benefiting a lot of other countries, and I think that is what he's trying to do, just to get a little bit of a fairer trade situation.
Right.
As you mentioned, we're not going back to the 1980s. We're not going to, you know, steel mills are not just going to be propped up all over this country tomorrow.
But we have gone back to Smoot-Hawley. I'm just going to say, going back further. I know. Love it, love it. Just for those on radio, Vince actually like rolled his eyes on that. Having said that, Vince, I want to go back to the market. You know, we technically intraday saw a 20% correction on the S&P 500, so technically hitting a bear market. We bounced back off of it. Is that significant that we didn't close there?
I think we'll wait to see how we do overnight and how China markets or the Asian markets react overnight. I mean, we could easily see us testing again tomorrow into the U.S. session, depending upon the rhetoric. I mean, you know, how is China going to push back tonight? We don't know. Yeah. We don't know what kind of comments we're going to get from Xi or other trade ministers from China. You know, we've pushed them pretty hard. You know, and to expect them again to come to the table is naive, I think.
What's the commentary that you're finding as you know, talk with traders throughout the day? I mean, yes, it's a lot of selling. Yes, the markets have functioned well. For those of us who were here during the great financial crisis, it was crazy, and you really felt like, I mean, I just remember thinking, oh my God, the financial market system.
It doesn't feel like that to you now, though.
It doesn't. No. I mean, I think everybody clearly understands why the market is selling off. There is a clear catalyst, and we
Some
understand.
might call it self-inflicted.
Yeah, and so exactly. So what do people say about the market selling about this, and when does it become something much more problematic than an understanding that it's coming from the White House directly?
Well, you know, I think the end game, I mean, obviously the administration's end game, and I think everybody would kind of think the same. If you look at this in the more medium to long term, this will pass. If you think about the financial crisis that you mentioned passed, I can remember the crash in the late 80s, looking over my shoulder, and every time I looked over at the teller rate, which was back then, and seeing where the Dow was going, oh my God, we're still going down. Yeah. You know, the sell-off of this magnitude, I think it's different in the sense that it's all happening in kind of 1 week, and then not just the sell-off, but the volatility. We're down, we're up, we're down, we're up. It kind of reminds me of trading currencies back in the 80s. This is a kind of volatility that we saw in currency markets 45 years ago. You don't really see it in equity markets so much. So it's unusual, and it's different, and I think a lot of folks in equities are just not accustomed to this. And I don't think any traders are really accustomed to this. Since we've gone electronic, we haven't had this kind of vol.
Vince, is there a technical signal that you can glean from stocks starting higher, then losing that momentum, and then finishing decidedly in the red?
You look at this and you look at, these are ugly tapes. I mean, without question, you don't like to see this kind of price action where you start out high in the morning and you have this positive euphoria, and then this sort of puke into the afternoon.
That's a technical term, right?
Continuing,
puke.
Puke is definitely a technical thing. And into the close, but I will say there was a positive to the close. I mean, we were down about 850 points, I think, in the Dow. We closed down around 320.
Yeah.
So there was definitely some capitulation, some buying. We're starting. I'm just glancing over. Futures is still trading lower as we head into the last hour before the break at 5 o'clock. So we are seeing a little bit of a sell-off in futures. It's not terrible. It's not aggressive. We have inflation numbers coming on Thursday and Friday, sentiment numbers coming on Friday, and we start the earnings season with banks on Friday. So my guess is the earnings bar is probably going to be set pretty low for next week and for the banks on Friday. So there is a very good chance we get some good numbers. And if the tariff conversation just quiets a little and we get some positive earnings next week and a good week of earnings, we could easily see this rebound dramatically.
Well, listen, around the markets we went with you. Thank you. Vince Signorella, Bloomberg macro strategist, joining us here on this Tuesday. And Vince did mention the futures in the aftermarket. S&P 500 E-mini futures, they're down about 1.7% as we speak. And NASDAQ 100 E-mini futures, they're now down just shy of 2%. So the selling continuing after the regular close on Wall Street.
Okay, Vince giving us some really good context, talking about the chatter that he's hearing, talking about what he's hearing from traders on a day such as today. I want to go cross-asset and bring in Denita Sakova. She is a Bloomberg News cross-asset reporter. She joins us here in the Bloomberg Interactive Brokers studio. Even though we can go cross-asset with you, I do want to start with the equity trade today. And, we talked a lot today about what happened with the S&P 500 up around 4%, then closing on the day today by down 1.6%, off its worst levels of the day, but very much so off its best levels of the day. What's the narrative that's emerging from the day's trade in the context of what we've seen over the last 4 days?
I think the biggest takeaway from today and yesterday, extreme intraday volatility. We saw today 7% intraday volatility, yesterday 9%. This has happened just a couple of times in the past 10 years. Incredible reversals if you look at the VIX.
You're just talking from high to low?
From high to low. Yeah. Incredible range. We've rarely seen something like this. The drop we saw at the beginning of the day of the VIX was 1 percentile drop, and the jump we saw at the end of the day was 1 percentile jump. So we're not seeing small, soft moves. We're seeing really drastic swings of the pendulum from one end to the other. Clearly, the market really wants to rally on those headlines. We saw the headline yesterday, which obviously was a fake headline, but we saw how fast and swift the reaction are. We obviously have a lot of algorithms reacting to headlines. We have a lot of investors who are very reliant on the VIX. When the VIX rises, they obviously increase exposure or decrease exposure. So there is like a whole system of investors who immediately react on headlines and the change in VIX.
What was volume today?
Volume, I'm not sure what it is today, but yesterday was the highest in quite some time. And actually, for ETFs, it was the second highest. The only highest time was during pandemic. That was yesterday, but I'm pretty sure today we're approaching those stats. And usually for ETFs, that's an interesting too. When we see those levels, we're approaching capitulation or we're at capitulation. Yesterday, it was 43% of trading. Really incredible volume, because obviously they're more macro too. So that's a little bit of a bearish. It could mean a reversal is coming, but it's a bearish indicator.
I don't know what the time frame that you look at, Denitsa, but I have it set to 20-day average. Yeah. And today we're up on the S&P 500 from a volume perspective, 40% above the 20-day average for volume.
Yeah, incredible volume. We've seen a lot of trading desks saying that things are crazy. Goldman said just a couple of days that they're 9.5 out of 10. So really capacity is going out of control. And we're talking about a cross-asset trade. That recession playbook keeps going. We had oil fell close to $60 a barrel. This is the first time this happened since 2021. Currency markets, we had so many stories of how crazy trading in currency markets has been, something we haven't seen in years. And we're seeing those massive reversal. We saw the day starting with hopes that the tariffs deadline for tonight may be delayed, or potentially there may be some negotiations. We saw a big spike in the S&P early in the day. But then, we didn't really come with relief. We had Greer testimony that brought more pain to markets. Then we had the press secretary announcing that 100.4% tariff on China, which is nothing new, but the fact that they reiterate that obviously put even more stress on investors.
In terms of cross assets, what was the most interesting trade today?
I think the recession trade across sectors, we have oil, we have small caps. We actually had a story from JP Morgan, which tracks the recession odds within cross asset. So Russell 2000 is pricing 80% chance of a recession and pretty much 100% chance of a mild recession. So when it comes to small caps, it's pretty much sure. We're seeing base metals around 60%. We're seeing 5-year treasuries pricing around 60% recession odds. So it's literally a clear signal across all those assets. The only place is credit. That's the only asset class that's clearly not pricing recession as of now.
But we have seen credit
We've
spread.
seen widening. We've seen widening, but from a very low level.
Right, yeah, exactly, right?
Yeah.
There was almost, Russell 2000's down about 28% from its high back in late November. So no surprise. Smaller cap names, so dependent on the U.S. economy, right? Yeah. And so those names we know have been beaten around in a big way. So appreciate that. We're going to leave it there. Thank you, thank you, thank you. Denitsa Sikova here in our Bloomberg Interactive Broker studio. She's Bloomberg News cross-asset reporter taking us through the day's market moves.
Well, from Wall Street to Capitol Hill, because politically this trade war is creating divisions in the Republican Party. Republican senators expressed anxiety over the potential economic toll of Donald Trump's global tariffs and pressed his trade representative for more clarity on the president's objectives in the trade conflict. Check out what Tom Tillis of North Carolina said today. Quote, "Whose throat do I get to choke if this turns out to be wrong?" This was as U.S. Trade Representative Jameson Greer testified before the Senate Finance Committee. You got Ted Cruz extending his critique of the tariffs. And then, Carol, you got to note Elon Musk, the billionaire presidential advisor, he attacked White House Trade Counselor Peter Navarro as dumber than a sack of bricks over this fight, this tariff regime spilling onto social media today.
We want to ask what Wendy Schiller thinks and makes of all of this. She's professor of political science at Brown University, joining us from Providence, Rhode Island. Professor Schiller, great to have you back with us. It does feel like some Republicans are getting a little uncomfortable with some of the president's policies. How do you read it?
Well, good afternoon, Carol and Tim. I think this is going to be an interesting sort of power play within the Republican Party, and it will spill over to the tax cut bill, because the only leverage that the Republican senators have, even vis-a-vis the House Republicans and President Trump, is the tax bill, which President Trump really, really wants. As an accomplishment, particularly for this year. So, if they're not getting the answers they want, if they want to protect particular industries in their states, even at the most local level, big businesses that are suffering from these tariffs or will suffer from the tariffs, they're going to have to play hardball with the president's most preferred legislative package, and that's the tax cuts. So you're going to start to see behind the scenes, but also maybe publicly, Rand Paul's been pretty out there from Kentucky saying he's not happy about this either. And I think that's what's beginning to disrupt the inter-chamber negotiations on the tax bill between the House and the Senate.
How much power do these members of Congress actually have? Because the president has shown he is not afraid to support primarying some of these folks if they don't get behind his agenda.
Yeah, his Trump's success record in primaries in the Senate level, at the Senate level, is not all that great. His success is a little bit better on the House side, but not really on the Senate side. And you mentioned Tom Tillis, who's running for re-election in North Carolina, Joni Ernst running for re-election in Iowa, just to name a few. And so those seats, particularly North Carolina, could be heavily contested. Let's say the former governor, Roy Cooper, wants to run. That's going to be a problem for Tom Tillis. So they've got to show some returns. What is the end game on the tariff fights? What does he expect to accomplish, President Trump? As you say in your prior conversations, you're not bringing textile manufacturing back to North Carolina. You have had a resurgence on a micro level of some companies making things in North Carolina.
Yeah, that's artisanal stuff, I think people would say. Truly.
Well, my understanding, I think there's a couple of companies that have taken over factories and done pretty well. But what is Tom Tillis going to say to North Carolina when things really become more expensive or inflation goes up and the tariffs are to blame, unless Trump pulls the plug on the tariffs before those kinds of inflationary pressures can really exert their will?
Wendy, what do you think is the end game? I mean, President Trump has talked about tariffs for a long time, right? This has been part of his playbook, and he didn't get to do as much as I think it's safe to say that he hoped to do maybe the first time around, doing something a lot more aggressively this time around. He likes tariffs. He said that. But I do wonder, too, I agree with you. What is the end game? Is it to get Europe to spend more on defense? Is it energy policy? Is it access for us to critical minerals? Like, what is it? Do we really understand what the end game is with all of this yet?
It's just unclear from the current public conversations that are leaking or being, leaked on social media or even just playing out on social media, what the team of advisors agrees on the end game, whether Trump is willing to even think about an end game. But what he'd like to do is probably go to a plant that was abandoned or shut down temporarily a couple of years ago and see it reopened. I mean, the only way you're going to convince the American people that paying more for all these goods, or small businesses that might have to lay off people, is that you have succeeded in creating jobs or bringing real jobs back. And that isn't happening quite yet. And that was the problem in the first administration. Very hard to do. He could not even prevent plants from closing down and going to Mexico. NATO defense spending will make some people happy, but the average American, I don't think is going to care very much about that.
To be fair, is there something, though, in the president's fight, right? We've talked with you about the gaps, right, within our society, that there's a bunch of people who feel like nobody is representing them. They can't get ahead. They can't buy a house. They can't get a good job. I was reading, I think this morning, about people who are making $40,000, $50,000 here in New York, and yet they go home to shelters because they can't afford to live in an apartment. So there's something wrong, some disconnect. So is there something to what the president is doing, whether it's with China in terms of leveling the playing field about access to markets?
Well, access to markets is fine, but in the United States, you have a combination of a lot of regulation, which makes making things more expensive. You have, we have weaker private sector unions than most of Europe does, for sure. We have some pretty strong public sector unions. So you'd have to sort of weaken the private sector unions, right? I mean, you'd have to do something like that to make it less expensive. He's going to eliminate a lot of regulation, which will make everybody happier, and that will mean slightly less environmental protection. There are trade-offs for everything we're doing, but it is more expensive to manufacture goods here, I think, for lots of reasons some people might like and dislike. So you have to dismantle that system, but if you're also dismantling healthcare and education, we're not going to stay competitive with the countries that are investing in those areas. So, the Trump administration has to have a holistic approach to this. And right now, I'm not sure we're seeing the things coming together, working in the same direction as much as we might like.
When it comes to negotiations directly with China, in your view, Wendy, how much leverage does the U.S. have?
Well, we have an awful lot of manufacturing in China. The farmers themselves, they export a lot to China. We are very dependent on China. There's also intellectual property. We haven't even heard about that from Donald Trump. Intellectual property theft. That was the big theme in his first administration. What's he going to do about that? I think it's a very difficult relationship to extricate from. But if Trump can get some manufacturing back, or at least, make corporations reopen or build plants here, do something like that, then it shows the Republican Party that this is a policy that could benefit them politically, which moves them closer to Trump, not further away. But that's a couple of years away. And the House elections in 26 just seem closer and closer every single day.
How do you think about this era? It's still being written as we speak. We just got about 30 seconds. How are you're teaching, how are you thinking about this, just quickly?
Forget everything that I've been teaching for a very long time. Forget everything you thought about strategy and motivation by the president and his team. This is a new day, a new way of doing things. He's disrupting, and we're all going to have to be very flexible and be able to pivot. But also, local politics. That's the thing. When does the House Republican Party break from President Trump, if ever?
10 seconds. Is this turmoil, this disruption, part of the strategy by the president to kind of get us off balance, in your view?
I think this is a guy who's been getting this country off balance since he declared for the presidency in 2015, and I don't see any time that that's going to end.
All right. So glad we could check in with you. Wendy Schiller, professor of political science at Brown University. Still to come, everybody, global finance upended by the depth of the president's tariff turmoil. A great deep dive. That's coming up next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the red. Wild swings today. The S&P 500 index knocking on the doorstep of a bear market right now. S&P today moving lower by 79 points, down 1.6%. Again, wild swings with the Dow down 320, a drop there of 0.8%. The NASDAQ Composite Index down 335 points today, a decline of 2.1%. The 10-year yield at 4.28%. The 2-year currently yielding today just about, right now, 2-year at 3.73%. Spot gold down $2 the ounce, down 0.1%, $29.81. And West Texas Intermediate crude down 4.1%, $58.22 a barrel on WTI. So to be clear, the 10-year 4.28%, the 2-year 3.72%. Spot gold, we mentioned that, down 0.1%. West Texas Intermediate crude down 4.1%, $58.16 a barrel on WTI. So what about the selling today? Mark Steffen is Global Alternative Investment Strategist at Wells Fargo Investment Institute, and he was a guest right here on Bloomberg Business Week Daily.
It just highlights the uncertainty that's out there right now. And obviously, investors were caught off guard by the size of the tariffs, which kind of precipitated the declining market that we're seeing here over the last week or so.
Mark Steffen of Wells Fargo Investment Institute interviewed on Bloomberg Business Week Daily. So again, recapping the Dow, the S&P, NASDAQ all end the session very much in the red. A 79-point drop today, down 1.6%. Should point out that at the best level of the day, we did have the S&P 500 index higher by 4%, ending though with a loss of 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here at Bloomberg headquarters, our Bloomberg Interactive Broker Studio. Well, not exactly what many were thinking about when it came to a second term for Donald Trump. And as our Max Abelson puts it, less than 100 days into the new U.S. administration, bankers from Wall Street to Shanghai's Pudong and the City of London are bracing for soured loans, canceled deals, forfeited fees, and perhaps threats to their own jobs. Credit markets are paralyzed while mergers and initial stock offerings are being pulled amid fears of recession. Ouch, a big ouch, not what people were expecting. Max is, of course, Bloomberg News finance reporter joining us here in studio. It's safe to say, if you think about the rally coming off of the election, right? Everybody expected easier regulatory environment, pro-business policies. I think all of the tech CEOs thought all of those cases from the government were not going to happen. And then yet here we are. It's very different.
Is very different. And let's go back to that moment, actually, the post-election giddiness from the kind of billionaire class, from the high echelons of the international finance industry, which is what I focus on, what I write about. I think there was everything you said is so accurate, Carol. But then there was this other dynamic that was happening at the same time too, which was there was a kind of dismissal of the more chaotic side of Trump, the part that zigzags and goes left but then goes right and then goes left again. And there was a faith that Trump was going to deliver the things that they wanted and would avoid the things that make them nauseous or that make them angry or that would make the market tank. Out of a deference that they saw in Trump. They saw that Trump had a deference for the stock market, both for the kind of Manhattan financial elite in particular, and then also for the more abstract stock market as a kind of benchmark, a report card.
Right.
This is what they believed. I mean, this is what they told me and talked about publicly. I wrote a couple of stories for Business Week and Bloomberg Markets at the time. That, it is fair to say, was really wrong. And they were wrong based on what we're seeing now. The lovely sentence that you read aloud is from Leonard and Claudia and Arno.
You
my
guys wrote
colleagues.
it. I just stole it.
Really, I want to give them credit. Listeners know that it was them who wrote it, not me.
Beautifully written.
And the wrongness has caught them unawares. Are
they really shocked? Like when you talk to them, are they like, "Oh my God"?
Carol, they are surprised, but more than surprised, they're annoyed. They're annoyed and they're angry, and they did not see this coming.
Is it because they took him seriously but not literally? The famous way that people were described to take the way that Trump spoke. Is it because of what he did during his first term, pointing to the Dow and the S&P 500 as a scorecard?
Or the fact that he was the president for 4 years and he did not put on gigantic tariffs on every country in the world, almost every country, I should say. But, you know, taking someone serious or someone literal, they could have taken Trump at his word, but the thing about his leadership is he really does seem to change his mind pretty quickly. In fact, there was that burst earlier today, like as in a few hours ago, where I think people, I think that there was a sense of relief in the market that he was going to change his mind again. And, you know, woe to the journalist or to the investor or to the executive who thinks that that they know what he's going to do. I think that the one thing that I feel sure about when it comes to Donald Trump, and I really don't feel sure about much, the one thing I feel sure about is that it's sort of impossible to prognosticate. It's impossible to predict. I really admire anyone who can sort of say with honesty that they've got him right and that they know what's going to happen, because I certainly don't. And these investors who thought that he was going to really kowtow to the markets, they certainly don't either.
Well, you know, what's interesting, Max, and I think about this all the time, that we said so often going into the election that if he wins a second term, he's not going to have the guardrails, right, that he had during the first term, that were people from business, CEOs, I guess from the more, I don't want to say normal community, but people who would say, wait, you can't do that, Mr. President, or you need to think about this. There are some people, though, Scott Bessent, right, who's Treasury Secretary, who understands the importance of markets that function well, understands the impact tariffs have, and yet not so sure that he's a guardrail.
Well, I think...
Or how does that, how do the people you talk to, do they say, well, wait a minute, we thought he might be a guardrail?
Well, your excellent question brings to mind Annie Massa and Kathy Burton's absolutely terrific story this morning. That's the Bloomberg Big Take. That's a profile of Bill Ackman, who Bill Ackman is one of many members of, you called it normal, I think a little bit tongue-in-cheek. I think you're really talking about the professional class, the executive class, the billionaire class.
This is why you're the reporter and the writer.
No, Carol, you can do no wrong in my mind. But what their piece captures so well is the sense of my bad.
It's
my
so
bad.
perfect.
Which is that's a quote from Ackman. I mean, he really said that. This is exactly what we're talking about. He predicted pro-growth, pro-business, pro-American. That was Ackman celebrating Trump's victory, saying that this was going to be this incredible administration. And then what does he say on X? I don't think this was foreseeable. I assumed economic rationality would be paramount.
The president telegraphed this. He said this, that he said he loves tariffs.
Right. And in fact, he told our editor-in-chief that for an interview last year. But let's talk about that. Because what he said was that he loved tariffs. He did not, however, talk about the depth, the extent, the volume, the hugeness, to use a Donald Trump word, of his tariffs. I'm thinking of the difference between the moment, speaking of markets, the moment when the markets seemed to breathe a sigh of relief when he used the number 10% tariffs. I'm talking about the big presentation just a few days ago. Feels like ancient history.
Right.
The difference, what he did not telegraph was remember the giant signs, you know, country by country down to like small island nations.
Filled with penguins.
Filled with penguins. Shout out to penguins, a wonderful animal.
Love them.
But those were high numbers.
Yeah.
Those are high numbers. What he did not telegraph was that mathematical equation that my friend and colleague Matt Levine wrote about, where they're basically doing something that was, I don't know, is unthinkable the right word? How about just simply unpredictable?
Unpredictable. I was going to ask you, just got 20 seconds here. Is there one word from the people that you talked to that kind of came to mind in trying to assess the situation? And I know we've used uncertainty a lot, but I was just curious.
I want to
just quickly
pick the words startled, surprised, and ultimately very disappointed. Those are Tom Glosser's words. And Tom Glosser is the lead independent board member at Morgan Stanley. So this is a guy who's a perfect symbol of that professional class. And he's talking about a group of people who are used to being inner circle, used to being relevant, working to preserve access, and they are startled.
It's a killer story, both of them, and the one on Bill Ackman as well. Max Abelson, Bloomberg News finance reporter, right here in our studio. I feel like those words are something you might use with a teenager. Startled.
Have you had experience?
Just a little. She's really good, though, now. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody. Carol Masser, Tim Stanovic, live in our Bloomberg Interactive Broker Studio. I'm sliding into my chair. Just a reminder of how we ended on this Tuesday, just off our lows of the session. So that meant down about 1.5% for the S&P 500. It did touch, though, bear market territory intraday. We did see a 20% move to the downside from its highs on the S&P 500, but did not close there, but still down 1.5%. Dow Jones Industrial Average down about 0.8%. NASDAQ 100 down about 2%. And I was watching those S&P E-minis in the after hour down about 1.7%. And the NASDAQ E-minis, folks, down almost 2% in the aftermarket.
I don't even know where to start. When I see red brown, I know that it's getting close to earnings season.
I know.
But that's not what we're talking about yet, even though we hear from JP Morgan and others, Carol, on Friday. In the meantime, let's take a look at some stocks that are on the move today. Bloomberg News earnings reporter Red Brown is in the house. Red, you had a lot to choose from today.
Certainly did.
Well, let's start with Enphase Energy.
Riches.
Enphase down 11% today, following a downgrade from Jefferies analyst Julian Dumoulin-Smith, who raised concerns around the company's potential exposure to cuts in the IRA. We know
this is the Inflation Reduction Act.
Correct. We know the Republican Republicans in the Senate are looking for kind of any area where they can cut money out of the budget. Inflation Reduction Act would probably be a pretty easy one for them.
This was all approved of spending, right? And now they're like pulling it back.
Right. I mean, you have to think it's a $430 billion target for them, right? And it's an easy one considering who pushed that legislation through. The stock is its lowest since it's been since July of 2020. So kind of been getting battered here for the last few years.
And a reminder, this is a solar equipment manufacturer.
Yes.
Got a market cap of about $6.5 billion.
Second worst performer in the S&P 500 today, so not too pretty.
Yes, definitely not. And Jefferies is kind of turning quite bearish on the stock. They're one of 4 sell ratings. Most of the ratings right now are holds, 22 holds and 15 buys. But Jefferies is kind of warning that the growth might not be there for the company going forward. While a lot of analysts are still pretty bullish, Jefferies expects low single-digit declines next year, just due to people not appreciating the level of risk kind of coming out of Washington, D.C.
Yeah, listen, I mean, right, all of those spending programs under the Biden administration, right, you're talking about money going into certain industries, right, almost, you start to do projections and expectations based on that, and that was kind of a given, and so now you do a 180 on that, right? It's a very different outlook.
Definitely, and it's not just Enphase either. First Solar as well was down around, I think, 5-ish% today as well, so just in general, those green stocks that were so heavily supported and had so much positive momentum behind them are starting to maybe wobble, given the changing tunes in the country.
First Solar down 7.5%. So just off its lows of the session.
Hey, speaking of a change in momentum, there was this idea that defense stocks would be a beneficiary at one point when people were thinking about this administration. What's going on now?
Yeah, well, if one sector is getting cuts or targeted for cuts, this is another one that's surprisingly quite supported. The news came out last night. President Trump, Defense Secretary Pete Hegseth says both talking up this idea of a $1 trillion defense budget, talking about that it's going to be in the vicinity of a $1 trillion. They want to be the first ones with that kind of flashy number. And it's really this promise to rebuild the military. So that's pushed General Dynamics, Lockheed, Northrop, and RTX all up, relatively speaking, considering how things are. They're all within the top 10 best performers of the S&P 500 today.
I thought we were pushing Europe to spend more on defense and other nations to spend more on defense so that the U.S. didn't have to kind of police the world.
Yeah, well, they also, I don't think it's very a political expedient thing to talk about cutting the military budget.
No, I know. No.
Correct, and that is where Doge is going to have trouble.
It's amazing, both Republicans and Democrats, right, in terms of defense spending. Sorry, I didn't mean to put you in a tough spot, but it's just wait a minute, let me understand this.
I can choose my words wisely, I guess.
You can.
No, I mean, it always has bipartisan support, right?
Yeah.
And also just to put it in context, they're really touting this $1 trillion. The stocks are up slow single digits, all of them. So, and the reason being is last year, if we remember, we kind of have a short memory with a lot of these things, but they were at $923 billion last year for fiscal 2024. Wow. Another $70 billion is not bad, obviously.
Yeah. Not too shabby.
But it's a moderate boost, and but it does speak to kind of the continued support of this industry.
Another one that actually ended in the green today.
Yeah, maybe if you want to just cash it all in and get away for a little while.
See ya.
Go take a sail on a ship.
See ya.
See you later.
Hit the high seas.
Carnival.
Yeah, I have to talk about cruises every time I'm in here.
Why are these? Why?
Why do I have to?
No, why is it higher? Because Red would rather be on a cruise than with us. We only got 30 seconds.
Okay, well, look, Carnival announced that another $2 billion for 2 new cruise ships. This is actually one of, if I'm not mistaken, the first announcement that they are going to restart building their capacity post-COVID. They've really been focusing on paying down their debt.
Yeah.
And I think it's really interesting. To me, I'm almost reading...
It's a big deal.
Exactly. I'm reading this almost like a buyback by the company, by the management, signaling that, look, we believe in our company, we believe in the direction that things are heading, to say that we're willing to invest through even this economic uncertain time.
Yeah.
But I mean, these ships probably won't hit the waters for many, many years, but still, they're willing to take on $2 billion despite everything else that's going on. And a lot of that has to do with the continued demand. I know I sound like a broken record within the cruise industry. We will get a little bit more insight into the travel industry tomorrow because Delta is reporting earnings.
We've talked to the CEO, Josh Weinstein, several